All right. Hello, everybody. Welcome back to another episode of the Market Open. I cannot be as loud as I usually am. You know me, I'm a pretty loud guy because we are in this hotel room. And honestly, the walls here are pretty thin and I can hear the other room. So I'm just hoping it's early right now in the morning. I am hoping someone doesn't knock on the door and say, shut the hell up. So we're going to be a little low in terms of the volume. The energy will still be there, but just can't have the volume that high. But everything should be okay. Hopefully audio should be good. Let me know if audio is good. And we got a market open to do. CPI is going to happen in 9 minutes. So we'll see how CPI plays out and where things go. And what happens with CPI. Where are you? I can't say yet. You guys will find out soon. You guys will find out pretty soon. Audio is great. Okay, good. Audio is good. Let me know if audio is bad at all. I really hope they don't knock on my door and they're like, yo, be quiet. It's too early for this. But I didn't know the walls would be this thin at the airport. Not the airport, at the hotel. Like, there were thin walls, dude. Like, I didn't think it would be this thin. But yeah, so there's no cowbell today. So there's definitely no cowbell. Okay, cool. So CPI, we got in 8 minutes. I hope it's good. And we got a lot to talk about when we get CPI. We have a lot of other things to talk about after CPI. In terms of the debate, dude, I know people are curious about my thoughts on it. I have not tweeted about it at all. I didn't watch the debate. I caught like maybe a couple clips of it in the very beginning at like right when it started. The last thing I heard was they're eating the dogs. Literally, that's the last thing I heard. And then I went off to an event, and I didn't hear anything else. So to be honest, I'm kind of happy that I didn't really watch the debate, because when I got back home at like about 11:30, which is 2:30 Eastern, so the debate was long over, and I got on Twitter and I saw what people are saying. I mean, it looks like it was a shit show from a lot of different angles. So I care about how the markets reacted to that. Initially, Bitcoin was down. So after not watching the debate, I thought, okay, so maybe Kamala kind of like did better. And that's why Bitcoin's recovering right now. Like, Bitcoin fell to last night. Where was it? There was the drop right there. So it went from 57.9 all the way down to 56. Now it's back at 56.840. So I don't know, like how did the markets kind of really interpret that? Futures were down right now, S&P 500. And again, we got CPI in 7 minutes. CPI futures. Yeah, like futures were down, but look at the S&P right now in the pre-markets. It's down 0.09%. So I'm curious what you guys have to say. I don't really have a perspective on the debate because, again, I really didn't watch it. But from what I heard, there's two takeaways. Number one, a lot of people said it was a little bit more 3-on-1, ABC News and Kamala versus Trump. And then a lot of people also said Trump didn't capitalize on a lot of opportunities. So kind of those two angles there. Trump was not capitalizing as much as he needed to, but his ability to capitalize was capped based on the bias that potentially existed on the news programming. But I didn't watch it. And you know what? It feels so nice to just say I didn't watch the debate. And I actually didn't, like, for once, I was not like glued to my TV trying to analyze what it would mean from a political perspective. Because at this point, dude, I don't know. Whoever wins, we're going to just have to fucking deal with it. And hopefully the markets continue to do what they need to do. Now, DJT is acting like, if you wanted a market representation of who they thought won or lost, DJT is down 12%. So from a DJT perspective, it kind of seems like markets thought Trump lost. But from an overall market perspective, I mean, futures are barely really down, right? Or pre-market's barely really down. So I don't think it's that crazy. Palantir down 2.16%. So Palantir taking a little bit of a hit. Some of the Bitcoin stocks, because Bitcoin had the initial drop, are taking a little bit of a hit. Have some updates on Google we'll talk about in a second. Tesla's down just a little bit. Square is up. So yesterday, Ally Financial, we talked about that during the market open. They reported higher consumer credit and delinquencies. They were down 17%. Today, they're rebounding a bit. I think fintech got unnecessarily sold off based on that. I mean, a company like Robinhood went down to 1897, then it ended at 1970. Now it's at 1955 in the pre-market. SoFi fell to like 670. Now it's at 705. So it seems like that was a dip to buy yesterday. An Ally is not an overarching trend of what's going to happen with the consumer, but it was one of those things that definitely got the street a little bit upset, or at least scared about what was happening in the broader credit markets. Okay, what are you guys saying in the chat? We have 5 minutes until CPI. Amit, are you in prison? No, I'm just in a hotel room. It doesn't look that good though, right? It's like it's $130 a night. It's it's relatively it's not a crappy hotel. It's a decent hotel, but the walls are thin, dude. Like that's why I hope just no one knocks on the door and says I'm too loud here. But I wasn't buying an Airbnb or paying for an Airbnb, dude. Airbnb prices were stupid. They're like $300 a night. It was so dumb. Amit is nothing without the bricks. Good morning, Amit. The debate was boring. Good morning. Good morning. Thank you, everybody, for being here. Sanjay says it was a rigged debate. Thomas says they hear you clapping some male cheeks last night. This is inappropriate. It's just it's just inappropriate. Vlad flew him out. I am not here for Robin Hood. It's not a Robin Hood thing. You guys will find out soon. You guys will find out pretty soon what's happening. Did you bring the cowbell with you? No, I didn't bring the cowbell with me. And B, I could not bring the cowbell because these walls are way too thin, dude. Missed you on the market close today. You know, there might be a chance for the market close today. There might be a chance. I have something to do at a certain time, and I think that thing ends 45 minutes before the market close. So I think I can Uber back, and I might be able to do the market close. Can't guarantee it, but I might be able to do a market close. Adobe had earnings today? What? Did they? Adobe had earnings? No, they didn't. No, Adobe doesn't have earnings. It's on Thursday. It's tomorrow. GameStop had earnings yesterday, though. We got 3 minutes until CPI. Oh, wait, let me show you the projections for CPI. GameStop, so GameStop right now in the pre-market, are they down? I imagine they're down. Yeah, they're down 10%. Two things. They beat on EPS. They missed on revenue, but they missed on revenue by 30%. So not good. Meaning their sales were down 30% year over year. And then second of all, they filed a shelf offering to dilute shareholders by another 20 million shares. So GameStop's raising even more cash after raising $3 billion in May, which is just at this point, it's disgusting, dude. Like at this point, I don't think it's, I mean, if you believe in GameStop, you believe in it, but you're just getting diluted for no reason at this point. So yeah, those were the earnings we had yesterday, but we'll have Adobe tomorrow. So here's CPI projections. Again, this CPI is not that like exciting because we kind of all know inflation's coming down. And I think I'm on the camp that it'll be 2.6. It wouldn't surprise me at 2.5. I think 2.7 is possible, and that would be bad because pretty much every bank says 2.6. So I think it'll come at 2.6. But yeah, this is just not that interesting. We know inflation's coming down. If we do come in at 2.6, though, I mean, the Fed funds rate is at 5.5. That's just stupid. It makes no sense, right? It's time for us to cut. If we come in at 2.5, then like that. I think that makes an argument for 50 bips. I really do. Even though I know JPal's probably not going to give us 50 bips, but I think it makes the argument for 50 bips. And hopefully we end up getting a decent cut because it's time for us to cut. It's time for us to cut. But I do think CPI is going to come in pretty flat or against expectations. So let me pull up the exact numbers here. Today's what, Wednesday? Yeah, here we go. All right, let's see, folks. Thomas says, I hope it's 3.1. Dude, you must like high interest rates or something. All right, let's see. These are the numbers. We've got 1 minute. Again, market's expecting 2.6. Last time we were at 2.9. And this is core inflation rate month over month, year over year. I think those will come in line with expectations. Won't be that crazy, but getting a 2.6 handle will be very, very important. If we go up by 2 to 2.8, I don't think that's the best, because the problem then is you're in a conundrum. The Fed has to cut for the labor market, but the Fed also has to not let inflation reaccelerate. And so you kind of need inflation to keep going down to keep cutting. And cutting without worry, right? The dual mandate can actually become a dual mandate if you're not worried about inflation. All right, let's see. This is from Trading Economics. Let's see. There's numbers. Wow, 2.5, folks. 2.5. I'm trying not to be super loud. I want to be super loud right now, but these walls are too thin. But 2.5. There it is, 2.5. 2.5. 2.5. 2.5. Inflation's coming down. Dude, the Fed's target is 2%. Are you kidding me? Where's the S&P? We've got to be moving on this. Why are we down on this? Why are we down? What the fuck? Why are we down? Why is it? How are we tanking on this? What the fuck is going on, dude? It's at 2.5. Why is this tanking? Is there a different number that missed or something? Goodness gracious. Why is good news bad news? This is so dumb. Month over month is 0.2. That came in expectations. Core inflation 3.2. That came with expectations. Core inflation rate month over month. That came in at 0.3. That's a little bit higher than what the market expected at 0.2. But we got 2.5 on the headline. Oh my God. Why is the market down 0.5%, dude? Why is Robinhood down 2%? Where's Palantir? Palantir just continues to fall. Palantir now below 34. Dude, this is so stupid. Why? Core CPI effect? Yeah, but that headline number, that's a good point, but the headline number the market really cares about, that is so weird, dude. Let me try to pull up the exact report from the BLS. All right, here we go, 2.5. Dude, why is the market, this is so dumb. This is, like, what is the market? Hold on, let me tweet this. Okay, inflation headline CPI comes in at 2.5%, below expectations of 2.6%. Oh my gosh. This is crazy, dude. Why? This doesn't make any sense to me. Federal funds rate. Okay. This is weird, dude. This is weird. All right, so let's read through this. The index for shelter rose 0.5% in August, and was the main factor in the all items increase. The food index increased 0.1% in August after rising 0.2% in July. The index for food away from home rose 0.3%, while the index for food at home was unchanged. The energy index fell 0.8% for the month, baby. I mean, we knew that with gas prices. We're seeing what's happening. The index for all items less food and energy rose 0.3% in August after rising 0.2%. Indexes which were increased in August include shelter, airline fares, motor vehicle insurance, education, and apparel. Wow. So we fell to guys, we went from 2.9 to 2.5 after shelter, airline, motor vehicle, education, and apparel went up. That's kind of crazy. The fact that we went down 0.4 points, but all four of those went up. Used cars and trucks, household furnishing, and operations, medical care, communication, and recreation were amongst those that decreased over the month. Wow. So we went, you know what? I think maybe the market's thinking that 2.5 is going to give us 50 bips, and 50 bips is kind of bearish. Market's still down. That wasn't like a flash crash. That was like a legit, the market did not interpret this as like good news. It's not recovering at all. At least not yet. So a bunch of things went up, including airline and apparel. I thought those would go down because they've been down for the past couple of months. But CPI came down 0.4%, probably because of oil. Maybe the market's thinking this is not a real CPI report because it's only based on oil. And the market's like, well, if it's only based on oil, then like, why are we taking it so seriously? Because oil is eventually going to come back. Could that be the argument? I mean, all right, let's look at CNBC. Let's try to get some more coverage on this and see why the market hates this.
Santelli here live.
Let me know if you can hear it as well, guys, because I'm having the audio through a different source. Let me know if you can't hear it.
CME HQ with the important breaking news of the morning. Our August read on consumer price index, the last look at this series of data points going into next week's obvious big FOMC meeting. CPI month over month headline up 0.2, exactly as expected. Up 0.3 when you strip out food and energy. That's 1/10 hotter than we were expecting. And that equals April. To find a higher, you have to go to March when it was up 0.4. If you look at the year over year numbers in the rear view mirror, 2.9. That now becomes 2.5. 2.5 is the smallest amount going back to February of 2021. And if you look at year over year X food and energy, 3.2, exactly as expected, and exactly the same as the rear view mirror. And what we want to definitely pay very, very close attention to here are the indices. CPI index going all the way back to 1913 actually moved down just a smidge from 3.1454 to 3.1479. That's higher, but it's lower than expectations. And once again, that is the highest level since 1913. And if you look at the core indice, which only goes back to 1957, it also came in more than expected and more than our last look at 319.76. It has never been higher. We see that.
Okay, let's keep going through some more numbers. By the way, let's give a happy birthday to Bay Ray in the chat. Shout out to you, Mr. Bay Ray, even though you constantly bully me in our group chat. But shout out to Bay Ray. Happy birthday to him. I think he turns like 23 today or something. This guy is young, and he's changing his financial future because he got interested in the markets when he was like, what, 21, 20? And Palantir, he got in early, Robinhood. So he's doing really well. So shout out to Bay Ray. Big supporter of the channel, good friend of mine, and he's here every day, and he's learning about the markets, and he's performing really well in the markets because he's young and he's got compounding time on his side. So shout out to you, Bay Ray. Happy birthday to you. 23. All right, it's the Jordan year. There you go. It is indeed the Jordan year. So let's get a little bit more information now on CPI. What else is happening? So I think the market's upset because of core. I think you guys are right. So core inflation month over month came in at 0.3. Consensus was 0.2. Previous was 0.2. That increase, you guys see that right there? That increase is what the market's upset about. And I guess we're getting to the stage of this market where you need to be so perfect and not miss these numbers in order for the market to not like kill you. But still, dude, 2.5 on the headline is like pretty aggressive, bro. I mean, that's pretty aggressive. Meats, poultry, fish, and eggs rose 3.2%. Non-alcoholic beverages increased 1.3%. Cereals and bakery products fell 0.3%. Energy decreased 0.8%. Gas prices decreased by 2.7%. Electricity decreased by 0.7%. Natural gas fell by 2%. Energy index decreased by 4% over the past 12 months. Gas fell 10.3% over the past 12 months. Used cars fell 1% following a 2.3% decrease in July. That's really good. We're seeing that come down. Household furnishings came down. The medical care index fell 0.1%. Communication index decreased by 0.1%. Index for new vehicles was unchanged. The index for all items less food and energy rose 3.2% over the past 12 months. Yeah, the Fed probably wanted 3.1, even though it says they wanted 3.2, but 3.1 would have been like healthy for them to see more sequential downside. And then core, they wanted 0.2 and we got 0.3. I think the reason core is up is because of this weird thing at the top where it says freaking shelter, airline, motor vehicle insurance, and education and apparel went up. Why are airline fares going up? Everyone's traveling. There should be so much competition for prices. Was that the Delta thing in August that messed up airline fares? Motor vehicle insurance, we talked about that yesterday. That is understandable. That's going up. Apparel should be coming down. It's been coming down for 3 months. Why is apparel increasing in August? Is it like people are paying more for back to school clothes and uniforms or something like that? That is really interesting. Shelter is shelter. I still don't think shelter is actually going up, but the Fed is constantly lagging on this. But the other stuff is kind of weird. Housing is bad. Are we going to have a housing crisis? Look, I mean, there are a lot of schools of thought on housing, but until we get inflation or until we get rates to come down, we're never going to solve the housing problem. Like we need rates to come down. And where's the 10-year right now? People need to be, by the way, mortgages just came down to their lowest levels at 6.25 today. So that's good. But I don't think people are going to start really buying 10 years up. People are selling off the 10-year. Interesting. I don't think people are going to start buying houses until mortgages get closer to 5.5. The 2-year, the 10-year and 2-year have not reinverted yet. They're still uninverted. So the 10-year is giving you 3.682. 2-year is giving you 3.679, but they are very close. They are very, very close. All right, let me see if I can get a little bit more coverage on this. Yeah, let's get a little bit more coverage here. And then we have a lot of tech stuff to talk about, a lot of macro stuff we'll get it to after CPI, but let's get a bit more coverage and then see how the market reacts.
Chief Investment Strategist at John Hancock Investment Management. Of course, our own Steve Leisman is here. Steve, I want to start with you and get your reaction to the number and maybe get inside the mind of the Fed as it's looking at this number this morning.
Well, I'll do that sequentially. Food was a goose egg. Energy down 0.8. I think we're going to get more of that given what's happened to the price of oil over the past month. Interesting, used cars down 1%. We thought they might level off here. New cars up at zero. Owner's equivalent rent, we can't get any help from. It's really quite a mystery. Up 0.5 again. This is the proxy that they use for housing costs. It doesn't seem to come down. I keep reading anecdotal reports about lower prices throughout the country, specifically places like Texas, places like Florida, and it's not showing up in the index. I don't know why. It continues to be expected to show up. One other thing was medical care services down 0.1%. There's an expectation that this is going to be coming back, and it had been down. Airline fares up 3.9%. I want to take a second to talk about this. There's a residual seasonality problem, or because the pandemic saw airline fares rise each summer, there's an expectation now that they'll continue to rise. The pandemic has messed up a lot of data, especially the seasonality aspect of it, the seasonal adjustments. We're going to be living with this for a while. Not sure how much airline fares have gone up. They tend to go down with energy. Real quickly then, as Rick pointed out, you have had a rise in
own monetary policy rules. They look a little bit behind a curve. So they can, there's a range of possible outcomes here where it's appropriate for them to be cutting. So I think that's really the message that they're going to send.
Emily, your reaction and what you think the Fed may do?
Yeah, this was a good report. In fact, this was the fourth consecutive good report we got after three bad ones to start the year. You know, the shelter component here is a little bit worrisome. It's been responsible for
We are still selling off, folks. We have not recovered yet at all.
70% of the gains in CPI over the last several months. So the housing market's just been very stubborn here. But overall, the Fed's going to be a lot more focused on the labor market. I agree with Tiffany. Last month's job report wasn't great. The revisions were terrible. Job openings are at the lowest level since 2021. We're hearing respondents in surveys telling us the jobs are hard to find. And then we heard from Powell at Jackson Hole that the Fed does not welcome any more cooling in the labor market. So we think that the focus here shifts away from inflation towards the labor market. It's going to be 25 basis points in September. Bond market's loading up the rest of the year, 50 basis points expected in November, 50 in December. We think that's a little bit too aggressive here, given that inflation and shelter still have not come down.
Well, and we speak to that. You know, if the view by the market, and the market hasn't been so right about the Fed this whole time, is that there's going to be a 50-point rate, there's going to be two 50-point cuts after September. There is this argument about, as they say, ripping the Band-Aid. If you know this is coming anyway, what's the advantage to doing it more slowly?
Yeah, I mean, I think, you know, bringing it back to the number that's priced in, we can talk about 50 or 25. You know, that's cute at the end of the day. The Fed on average cuts 17 times in a cutting cycle. That's a 4.25% drop in the Fed funds rate from peak to trough. Now, that might not be the case this time. Maybe we have the soft landing. But if this plays out as history suggests, that the Fed is cutting pretty deeply to deal with a contraction in economic activity, the unemployment rate shooting up. And in that environment, just bringing it back to the investment perspective, there's a nice opportunity here to look at any backups in bond yields. And certainly we're seeing that a bit this morning, and take advantage of the elevated income that's available here in fixed income.
I need to thank all of you, Tiffany.
Oh my gosh, dude. This is so annoying. I mean, could you guys imagine 8 months ago? We've been covering CPI for so long. Could you imagine one day we said, hey, 2.5%, guys, we're at 2.5 and the market sells off. Like, do you remember the days we were hoping for 5.2 versus 5.7? Like, we had those days a year ago. Market's kind of recovering a little bit, still not really that aggressive. But S&P 500 right here is still down almost 0.5%. The fact that we got 2.5 and the market wants it to be so perfect to the point where core can't have this type of a miss. Where's Bitcoin? Holy crap, where's Bitcoin? Is Bitcoin down? Bitcoin's down like 300 points. That's not too crazy, but it looks like the market doesn't care, dude. The market really is unhinged about how perfect it needs to be. It also is September. Yeah, that's a good point. It is September. We'll see what happens when it opens. It's not horrible. I don't want to act like we're crashing or anything like that. It's just I mean, dude, 2.5. You would think market's like, yes, like even if core is a little bit tougher, it's like, dude, the federal funds rate is more than double that. Like, it doesn't make any sense at 5.5%. But I think the market's already priced in the rate cuts, so they kind of don't care, right? They need something so crazy. 2.6 was the expectation consensus. Even Trueflation, their research report last night when I was reading it, they said, hey, we think 2.6. So this 2.5 number is actually very nice. It's actually very nice. Jobs are difficult to find. People are too full of themselves. I've been hiring the last 3 years. Finding people who want to work is challenging. Yeah, I mean, and that comes down to the labor market. Today's what, Thursday? No, tomorrow we get initial claims again on jobless claims. We've got to fight two battles here, folks. We've got to fight the inflation battle and we've got to fight the unemployment battle. And so far, inflation's doing well. Today was not perfect. It could have been perfect if we did better on one metric. Jobs has been horrible fighting that battle. And so I don't know. I mean, and then we have to get through an election where the market has to figure out if they like Kamala or if they like Trump more, and then deal with the ramifications of whoever's going to win. So I guess we're going to have to see. We're going to have to see how this ends up playing out, but it will take some time. TJ, what's up? Good or no good? It's good to me. I mean, this is an amazing report. There's one metric. Again, let me just share it right here. There is one metric that the street is upset about. If this metric came in lower, I think we would be up like at least 0.5%, if not 1%. I mean, this is an amazing report. So right here, core inflation 3.2, month over month 0.2, year over year 2.5, and then core month over month came in at 0.3. Now, core is what the Fed really cares about. But look, we came from 2.9 to 2.5. Like, I feel like that's not getting enough credit. If we don't reaccelerate from 2.5 and we go down to 2.3 next month or 2.2, I mean, dude, the target is 2. Like, we are pretty much there. And hopefully the Fed hasn't forced us into a recession just to be able to get here. And we enable that soft landing, but still not fully sure if that's going to be the case. Doug says jobs data is false, revised down later, proves that the cuts already needed to happen already. Well, yeah, that's the thing I'm scared about. That's what I think happened last week on the September 6th jobs report. The market just didn't believe it because they know it's going to be revised. And they know it was going to be revised because July and June were revised on September 6th. So I think the market was like, okay, so this is actually worse than expected, which means the Fed has not cut enough, which means we're going to be cutting into a recession if we get massive unemployment. I mean, dude, if we have a recession, like if we have like a legit recession, it's going to be just really interesting to see how that plays out. Because again, you've got a ton of, all right, let's transition into some other macro topics because that goes into the consumer. So for those that are just joining, CPI came in at 2.5, market selling off because we wanted 0.2 on the core CPI month over month, or core inflation rate month over month. We came in at 0.3. If we have some massive recession, it's going to be led by unemployment and the consumer not being able to spend. And again, I'm not saying that can't happen. It's just there's so much evidence out there. Either these CEOs are lying or we're not fully looking at the whole story. They're saying the consumer is good. So let's listen to two of them. Shopify CFO says, I haven't seen a step up or down in consumer spend. It's been pretty consistent. It's not necessarily getting better or worse. Candidly, I think we're simply taking share in terms of the numbers that we're posting. So Shopify right there is saying, hey, it's not really about the consumer, but people are still choosing to buy online, and Shopify just ends up being a really good store, a really good platform that people use to be able to do their shopping. Now, you could argue that, okay, so people are, buying from Shopify stores, but they're not buying from other stores. But Shopify is an e-commerce platform. If people aren't buying at all, then Shopify should see downtrends, and that's not what they're seeing. Then we have MasterCard CEO. This was at the Goldman Sachs conference yesterday. Our view of consumer spending remaining healthy continues. We now have the benefits of the first 4 weeks of August to look at. If you compare that to what we saw in July, they're very consistent. We're going to get retail sales data, I think in a week after. Yeah, I think next week we get that. So MasterCard, again, trillions of dollars are swiped every single day through MasterCard and Visa. Their argument is, hey, based on all the aggregate retail sales data we look at, which you literally cannot lie about that. So it's not possible to lie about that stuff. That's not the BLS. That's like actual consumer spending or not spending cash. That gives you a sort of viewpoint into, okay, so people are still spending. And at the end of the day, this matters because if people are still spending, then companies are still getting revenue and they're going to be able to put up earnings growth. And by the way, expectations for Q3 have been lowered. It's not expectations for Q2 were the highest they've been in a couple quarters at 11% growth. I think now it's at 8%. So as long as we beat earnings on average by 8% for the S&P 500 companies, markets should be rewarding a decent amount of these stocks. S&P recovering a little bit right now, down about 0.25%. I would imagine we go green when we open because I thought this report was pretty good. But we'll see what happens at 9:30. So yeah, like again, getting into some crazy catastrophic recession, everyone's scared, yada, yada, yada. It would have to be led by job losses. And I know that unemployment is not amazing right now, but it's not horrible. Also, one thing about this as well, 2007 and 2000, a lot of people go back to that as like, those were the first times where rate cuts and unemployment coming down showed you how rate cuts were not able to save unemployment, AKA a soft landing was not able to happen. And markets took like 4 years to recover. And then after that, they fell even more, right? 2007, 2000 were just like a really tough time in the market. The problem is, the more I think about that, the more I remember, wait a second, 2000, we had a dot-com crash. 2007, we had a housing bubble. So unless the AI bubble crashes, which it doesn't seem like that's going to be the case, then wait a second. Wait a second. Where's this massive underlying thing that causes this economic disruption that compounds unemployment, et cetera, all that stuff? Where is that? I don't know if that's there. I don't know if that's fully there. By the way, got some breaking news for you guys. We have a friend of the channel yesterday who publicly came out with a statement that I think a lot of you guys are going to definitely be happy about based on what he said on the podcast that he did. Our boy Kris is starting to get bullish on NVIDIA. Our boy Kris is starting to get a little bit more bullish on NVIDIA. So I know some of you guys hear that. I'm like, all right, that's the top. That's it. If Kris is bullish, if Kris is bullish on NVIDIA, that's the top. But Kris, you know what Kris saw? You know what Kris saw? Kris saw those Oracle numbers. And when Kris saw by the way, anyone in this chat who cares about AI, who cares about innovation, you need to listen to the Oracle earnings call. You need to listen to the Oracle earnings call, because if you didn't listen to the Oracle earnings call, I don't think you have an accurate understanding or representation of what inflation, or not what inflation, of what AI could become. So please take 30 minutes of your life and listen to that Q&A by Larry Ellison. I thought it was very, very important. I didn't know how great Larry Ellison was of a speaker, by the way. He was amazing. But the point of me bringing this up is that in 2007, 2000, we had this massive bubble, whether it was housing.com, and then that compounded to a crash. Is AI that bubble? I don't think so. And yesterday, when Kris put out his podcast talking about AI, and he says, hey, these Oracle numbers are making me bullish on NVIDIA, I was like, oh, wait a second. Dude, Kris has been bearish for like the past 7 months now. If he's starting to get bullish on AI, that means he's seeing numbers that are just like, okay, these numbers are real. It's time we start acknowledging these numbers as real. And I think from that perspective, if AI is not a bubble, which I don't think, most of us thought it was, then what is that thing that's going to collapse and then cause this crazy recession? Because you need something to collapse. I don't think it can just be from unemployment. I don't think it can just be, oh, people lose their jobs, they're not spending as much. That'll create some pain, but that's not going to create 30% down in the S&P. That'll create maybe 10% down, maybe 15% down. Maybe we're flat for 2025, but that's not creating a horrible crash. That's just not happening off of unemployment. I think we need something that really pops, and I don't think AI is a bubble yet. And so I don't think that'll be the reason to pop. We'll probably get him on the channel next week. I don't know if he can join this week, but we'll talk to him about his NVIDIA thesis, and he'll be able to explain a little bit more. But I mean, I think it's that Oracle earnings is turning a lot of doubters into believers, because you're just seeing the sheer amount of money that people are spending. All right, let's listen to a couple of clips speaking on this topic of AI. So this compounds with another topic, which is Google. A lot of us are trying to figure out, hey, is Google a value opportunity right here? We have some good clips of Sergey at the Olin Summit talking about Google and AI. Here's what he said about why Google is spending so much on CapEx. I think this is very important to listen to for people who are upset that Google's spending like $15 billion a quarter.
For us, we're kind of building out compute as quickly as we can, and we just have a huge amount of demand. I mean, for example, our cloud customers just want a huge amount of TPUs, GPUs, you name it. We just can't, we have to turn down customers because we just don't have the compute available. And we use it internally to train our own models, to serve our own models, and so forth. So I think there are very good reasons that companies are currently building out compute at a fast pace. I just don't know that I would look at the training trends and extrapolate 3 orders of magnitude ahead just blindly from where we are today.
But the enterprise demand is there, out there.
You know, I mean, they want to do lots of other things. For example, running inference on all these AI models, applying them to all these new applications. Yeah, there doesn't seem to be a limit right now.
For those that don't know who this is Sergey Brin is the co-founder of Google. Sergey Brin is the co-founder of Google, for those that don't know. Here's another clip of him talking about why Google has been late to the AI party.
Language models to begin with, like we invented them basically with a transformer paper that was whatever 6-8 years ago, something like that. Noam, by the way, is back at Google now, which is awesome. Yeah, we were too timid to deploy them, and you know, for a lot of good reasons, like whatever, they make mistakes, they say embarrassing things, whatever, you know. They're, you know, sometimes they're just like kind of embarrassing how dumb they are. Even today's like latest and greatest things like make really stupid mistakes people would never make. And at the same time, like they're incredibly powerful and they can help you do things you never would have done. And, you know, like I've like programmed really complicated things with my kids. Like they'll just program it because they just ask the AI using all these really complicated APIs and all kinds of things that would take like a month to like learn.
So again, I mean, like it's just proving the argument. You've got Sergey Brin saying, "Hey, we're spending so much on capex because the demand is crazy." I mean, dude, he literally said we have to turn down enterprise clients. This is the AI spending spree. Year to date, Meta, Google, Microsoft, Amazon have spent $52.9 billion on AI. Or sorry, not year to date. This is last quarter. My bad. Last quarter. Literally last quarter, dude. Like Q2, $52.9 billion AI infrastructure. And most of that obviously has gone to NVIDIA because they're buying GPUs. So when you think of it from this perspective, again, the reason I brought this topic up is because if we're supposed to have a cataclysmic crash, there has to be a trigger that causes it. And you can say it's unemployment, and sure, that could cause a crash. I don't know if that is cataclysmic to the point where it is so aggressively, you know, 2007, 2000.com bubble type of a crash where everything collapses in and of itself. And it doesn't feel like that's the case. And again, those Oracle numbers were just insane. As someone said in the chat, Oracle wants to build 2,000 data centers. They only have 162. Larry Ellison said it takes $100 billion to build a foundation model. It is not easy to build a foundation model. There's only a couple companies in the world that have the money to spend for it. And that's also bullish, because if there's only a couple companies in the world that have the money to be able to spend on training a foundation model, guess what they're going to do? They're going to spend their money to build a foundation model because they're the only ones that can do it. And they know how important it is. And so they're going to take advantage of the free cash flows that they have, which is why I think investors are giving them the premiums. One more clip from Sergey talking about why AI requires so much more compute.
You definitely need a lot of compute. I think like I've read some articles out there that just like extrapolate. They're like, you know, it's like 100 megawatts and a gigawatt and 10 gigawatts and 100 gigawatts. And I don't know if I'm quite a believer in, you know, that level of extrapolation. Partly because also the algorithmic improvements that have come over the course of the last few years maybe are actually even outpacing the increased compute that's put into these models.
Again, it doesn't seem like AI is necessarily going anywhere. Is the market recovering? Wow, why is NVIDIA up 1%? Huh. NVIDIA is getting 1%. Is S&P green? DJT is still down 13%. Well, S&P is recovering. I mean, S&P might go green. Looks like that initial drop, markets are forgetting about that, and they're realizing CPI came from 2.9 to 2.5, and maybe we shouldn't get so upset about that. Apple's up a little bit as well, up 0.24%. Oh, let's get an update as well on Apple and that super cycle by Dan Ives. So my thoughts on this again yesterday were that I don't think there was anything interesting for a reason to upgrade, but I'm not saying there won't be upgrades, obviously, because people have not upgraded in 3 years. It's just from an AI perspective, I don't know how much excitement there is, you know, for those Gen AI features to be a catalyst to upgrade. But we're probably going to still see some upgrades. And again, Apple's going to be another big player here that needs to make AI have a bit more momentum to cut through the noise. and for people to actually care a little bit more about what's going on. AT&T CEO yesterday said the Apple upgrade cycle will be meaningful, but it won't be a super cycle. So you've got AT&T also looking at the event they had on September 10th and saying, you know what, or September 9th, it was a good event, but it wasn't the craziest event for us to get so excited that we're going to think there's going to be these massive upgrades. Did Dan say there's a potential 300 million customers pending upgrade? Well, let's hear from him right now and why he upgraded the stock to 300 for Apple. Here we go.
Consumers are not going to run out there for this AI-empowered phone.
Well, look, I think it's twofold. I mean, what you talk about in terms of the upgrades, 300 million iPhones have not upgraded in 4+ years of 1.5 billion iPhones. And that's why I'm in Asia today. I'm this second trip in the last 6 weeks. Everything we're seeing in the supply chain, builds have been increasing, right? Up 10 million from where it was to begin with. So that indicates if that trajectory continues, and this is even before Apple Intelligence in terms of everything gets rolled out, this will be a historical year for Apple. I think this will be their biggest unit year ever. And it's just a drum roll to what I view as an AI-driven super cycle that now starts to take place.
What, Dan, it's Sarah. What is a super cycle? What does that look like? What's the difference between a super cycle and a typical upgrade cycle?
Yeah, I mean, a super cycle I would view as anything above 230 million units. And I think this could be 240, potentially 250 million units from what we're seeing. Now, look, Joanna hits it, on exactly in terms of the upgrade cycle. Part of it is the most pent-up demand we've ever seen for an upgrade, just given how many have not upgraded. But when you look at Apple Intelligence, AI will now, I think 20% of consumers around the world, they will access AI through Cupertino. And that is ultimately the key to really what's going to be a multi-year upgrade cycle. iPhone 16, iPhone 17, Speaks are a $300 price tag. And I think a year from now, this is a $4 trillion market cap or sooner.
Dan, what about the ruling by the European court against Apple this morning? Puts a damper on it? I mean, the $13 billion back taxes. I can't even remember how long I've been following this case. It's been going on so long, and Apple has fought it so hard.
Yeah, like almost 8-9 years. I mean, look, they already allocated money for that. So, I mean, they'll just take a charge in the quarter. As insane as it sounds, it's actually not a big deal. I think investors actually expected that probably they'd lose this. They're going to continue to have these issues in Brussels, in the Beltway. But I think investors are going to shrug it off because it all comes down to this. The renaissance of growth is now ahead for Apple. And I think many of the doubters, going back to WWDC, have really been against this story. And I think they will continue to prove wrong. The AI consumer revolution begins now in Cupertino.
And Joanna, let me just end with you on that note in terms of, Apple Intelligence. When do you think consumers will be motivated to go out and get the phone because of what is being offered in terms of generative AI on that device?
I think we're looking at least 6 months, maybe a year, for all of the features Apple showed off in June at WWDC to hit the phones. And look,
so again, Dan is bullish. 300 million people upgrading. I don't know about that, bro. That's aggressive. SPY just went green. Okay, we're green. We're slightly green, 0.05%. But we are green on the day, which is good. Again, I thought the reactions to CPI would be much more aggressive. We'll see what happens when we open in 26 minutes. But it is nice to see that. NVIDIA right here up 1.42%. Put in the chat, have you been buying NVIDIA in this like low $100 range? Let me know. Have you been buying NVIDIA at all? Because again, those Oracle earnings did create a lot of more momentum, I think, for AI in general. But curious if people have been buying or if people are waiting. Again, maybe this week is a little bit of a bull trap and September still ends up pretty bad and we have even worse prices. That's why I haven't bought the dip on pretty much anything yet. But so far this week has been okay. Wow, Bitcoin at 57. Bitcoin at 57. Huh. Not bad. Market's actually okay. Why would I buy the new iPhone if there wasn't anything really exciting with it? Well, if you have an iPhone 12, you're going to buy a new iPhone. I think that's what Dan's talking about. It's like people just haven't upgraded in a long time. I upgraded last year. If I didn't upgrade last year, I would be upgrading this year. But I did upgrade last year, so I'm not going to be upgrading. But I understand for people that haven't upgraded. I just don't know if it's going to be a super cycle. And again, all those reports came out yesterday from Bernstein and Goldman Sachs saying, hey, we don't really think it's a super cycle, but we think it'll be a big upgrade cycle. And so they're kind of walking back their statements because even they don't think the big feature was there to get people in. I think it's 50-50. Some of you guys saying yes. Someone bought 1,000 shares. Someone said no. Yes. Buying Wendy's. Okay, interesting. I'm waiting for the 90s. It seems more of you are saying no versus yes on the NVIDIAs. Yeah, GameStop's not doing the best. GameStop's down 10%. Again, dude, if you're going to keep doing this dilution, you're going to get hit by the market. So if they want to keep diluting people, 20 million shares, again, I don't even know why they need the cash, dude. They have $4 billion in cash. Like, why do you need the cash? It's literally just taking advantage of a stock that's obviously priced aggressively compared to the tangible book value. But it is what it is, I guess. SMH is up a little bit. Adobe's up. They have earnings tomorrow. Rocket Lab's down a little bit. CrowdStrike is up a little bit in the pre-markets. NVIDIA right here, 1.3. Wow, NVIDIA's moving. NVIDIA's moving. Robinhood recovering a little bit, 0.81%. The Robinhood 1% transfer is back. Oh, guys, by the way. So I was on the plane yesterday. Friend texted me. He's like, yo, is the Robinhood 1% transfer match back? I was like, yeah, it's back. He's like, cool. I just transferred $25 million from Fidelity into Robinhood. And I was like, you did what? He was like, yeah, he's going to get 250 grand for transferring $25 million. I was just like, okay, cool. And then he was like, by the way, I put in an order to buy 200,000 shares at 19. I hope it gets filled. I was like, okay. I'm just reading I'm on the plane and I'm like, what the fuck? Dude, some people just have money they're just playing with, dude. They're just playing with. $25 million, dude. That means Robinhood does about 100 million a day. They did 25% of their daily deposits with one guy. It's not Derek. Derek already put a ton of money in Robinhood months ago, so he already transferred a crap ton of money. This is a different person, but I was just like, wow, that is a lot of money. So that 1%. So the reason I'm bringing this up is because that 1% transfer match, I mean, it's working. It incentivized someone to bring over $25 million from Fidelity. And I had a bunch of you guys text me. The last text I got from one of you guys on Twitter was someone transferred 170,000. Let me know if you transferred. DM me on Twitter. I would love to know how much you transferred. And just to get a little bit more DD on how many people are transferring. But it's working, dude. People are transferring. And that money is going to add up. And September already is a sucky month for Robinhood. So I do think they kind of need to do this to really make sure they consolidate their deposits and have a good quarter. And so we'll see what happens. But you do only get the match if you keep the money in for a minimum of 2 years. Yeah, but again, like if he doesn't need to take out the 25 million, which I imagine he doesn't because he has money in other places, then you just let the money sit there. And by the way, if you're going to get even if rates come down to 3% and he gets 3% on the 25 million or 2%, I don't think rates are coming down to 2%. Let's say rates come down to maybe 2.75, 3% in 2 years. I mean, just having it sit there in Robinhood is going to be profitable, right? So I think if you're, transferring the money, the waiting to 2 years is not a big issue. The question is like, what are you getting for waiting? And if you're getting 250,000 just to bring your money, then I don't think that's the worst thing in the world. CPI was 2.5 for those that are joining. CPI was 2.5. Jensen is speaking at the Goldman Sachs conference. Maybe that's why NVIDIA is up pre-market. Does anyone know when he's speaking? That's not now, right? I know Vlad and Noto talked over the past couple of days. There's a bunch of people they have, but yeah, I think it's in the middle of the day. Maybe that's why NVIDIA's up. Maybe they're gonna ask him some questions about NVIDIA. He's gonna give some more insight. We haven't heard from him since earnings. I'm pretty sure he's not gonna say anything that different. I listened to Vlad's interview yesterday. Didn't say anything that we didn't already know. Pretty much the same stuff that we all expected in terms of Robinhood's broader growth and what they're doing. So, nothing too crazy. 10:20 in about these two. Okay, so cool. Okay, so we'll try to listen to. We should listen to Vlad was also on CNBC yesterday. Let's watch that. If Jensen does an interview with CNBC before his actual conference talk, then that would be good. So you guys are saying he'll be on CNBC at 10:20. Okay, cool. Sounds good. Yeah, so we can watch that. We can definitely watch that. But yeah, I mean, overall, nothing too crazy from all these conference like CEO talks that we've seen so far. Pretty much all saying the same thing that we expected them to say. They don't really give any new private information or anything, but better context of how the company overall is doing. Vlad could have said they were going after a bank charter and would have killed SoFi. So I know at the end he did say that. So let's watch that right now. I'm happy, dude. I'm so happy Robinhood's not a bank. Being a bank sucks. So many regulations. You can't do crypto. Like, I think Vlad knows being like Robinhood's basically a bank without being a bank. They can give out loans with a margin. They can collateralize your assets. So those loans are not that unsecured. And then they can get revenues that are based on net interest income, which is what a bank, tends to do. So I really like that they're not a bank. They don't have to deal with the financial regulation parts of being a bank, but they still operate like a bank. All right, here's Vlad yesterday on CNBC.
Hey, David. Good morning. That's right. We've got Vlad Tenev here, the CEO of Robinhood. Good to see you, Vlad. Thanks for sitting down with us.
Pleasure. Thanks for having me.
Appreciate the time. I want to talk about the roller coaster that markets have been on lately. How are your clients reacting to all this volatility we've seen in the past month or so?
Well, we have lots of different types of clients. I think one thing people don't realize yet about Robinhood is it's a diversified business. We now have 8 business lines that are 100 million a year or more in revenue. So we have active traders that are more sophisticated. They're using options and taking advantage of our user experience and great pricing on options, and they tend to be active regardless of what's going on in the market. If it's moving up, if it's moving down, if it's moving sideways, they're kind of engaging. We have the retail investor index that maybe you're aware of that shows kind of the most commonly traded and held stocks in the Robinhood community. Robinhood customers tend to be long innovation. So they're investing in AI companies, electric vehicles, a lot of growth stocks. But we also have customers that are taking advantage of Robinhood Gold with the high yield and stashing money away while not investing to earn an industry-leading yield.
You mentioned innovation stocks. I wonder how important NVIDIA is to the average retail portfolio at this point. Is it 60-40 anymore? Are people even looking to allocate to fixed income, or is it something like 60%?
This is why I like Vlad, dude. He comes to a Goldman Sachs conference with like green shoes. Like, he's just swagged out, dude. He doesn't care. He does his thing.
NVIDIA at this point.
Yeah, I think if you look at the Robinhood Investor Index, NVIDIA has really kind of like surged to the top of the list. It's been one of the most popular stocks among the community, just because I think our customers do research. They understand how important it is to the whole AI ecosystem. Every AI company at the end of the day ends up indirectly or directly kind of like using the chips, and NVIDIA has been a market leader on that. But and certainly there have been big headwinds and tailwinds, geopolitical, interest rates, inflation. But AI has been it's been a great story of America again being at the forefront of innovation. And I think our customers are resonating with that.
Yeah, NVIDIA has gotten hit lately, so I'm sure there's a little bit of pain in the past month or so in terms of NVIDIA's downfall. I do want to ask though about the interest rate environment. Robinhood has become much more indexed to the rate environment. You guys get net interest income. You're looking a little bit more like a bank these days. How would lower rates impact your financials going forward?
Yeah, it's funny. A couple of years ago, right after Robinhood went public, we were in a zero interest rate environment. And obviously in that environment, we had done quite well. So the question was, how would you guys do in an environment where rates normalize, where there's less interest in trading? And we had to put in a lot of work. We put in work to diversify the business, to launch our gold offering, to give customers high yield and retirement and access to things that actually they're more interested in a high rate environment. And we diversified the business. As I mentioned, 8 business lines now with 100 million a year in revenue or more. And so we feel pretty good. We think that our business perhaps is even stronger in a low rate environment. Transaction volume, which has been doing well, tends to increase with low rates. Trading activity increases. margin, which we've made significant improvements in the product over the past few months, becomes more attractive with low rates. And our credit card, which is rolling out, I think benefits from a lower rate environment as well. So I think that there's puts and takes. Certain business lines will be affected differently than others. But I think by and large, we should continue to do well, and we'll continue to diversify the business as well.
And Vlad, Sarah's got a question for you.
Hey, Vlad. It's Sarah. I'm here at the Barclays Financial Conference with the less sexy global banking giants. Hey, and one thing that's not getting a lot of airtime here is crypto. And I know it's been big for you in the last quarter. Volumes shot up. You're taking market share. You just bought Bitstamp. I'm curious, I know you're also taking on some of the regulators here and enforcement actions, just what the strategy is for you for crypto, how big of a business it can get to be, and how much of a priority for you.
Yeah, I think there's two ways of viewing crypto. One is as an asset class for active traders. And of course, we've been a leader there, giving our customers the access to crypto assets, both in the US and in Europe. But I think there's a more interesting view of crypto, which is that it's an infrastructure upgrade and a shift in how financial services are offered and delivered. And if you look at blockchains and the efficiency with which you can offer collateralized lending, trading, market making, clearing and settlement, it really has the potential to solve a lot of the legacy issues with the financial infrastructure that we have in this country. And I think over time that will become more clear as you're seeing growth in products globally. And I do think the US will continue to embrace the technology. Of course, the regulatory environment will fluctuate, but over time, I think it's clear that this is going to be a big boon to innovation in financial services, and the US will get there in terms of acceptance.
There we go. Last thing they talked about that was not in this interview was the wealth transfer. And Vlad just basically said, hey, there's $70 trillion that's going to come down to millennials over the next few decades, and he wants Robinhood to be a big player there. S&P is green, Nvidia is green, Palantir slightly red, Bitcoin right here at 57,000. So that's the update on Robinhood. We'll see how their numbers turn out in the month of September, and then we'll get to Q3 earnings. Next big catalyst for them is October for their event when it comes to active traders. Okay, so for Palantir, a couple updates on Palantir. So let's talk about Palantir. First of all, how is everyone feeling about holding 34 for basically 2 days in a row? I know we're at 34.08 right now. We might tank as the market opens because CPI was good, but not great. But how is everyone feeling? What's your room check, or what's the temperature check on Palantir? A couple updates for you while you're putting those comments in the chat. Number one, Palantir put out a video yesterday. And this is the video. I don't know what it is, but this is what they put out. And I guess we'll get more information soon. The caption is, "It can't be contained, coming soon." That's it. It's a blue box. It's funny it's not a black box. If anyone knows what it is, let me know what you guys think it is. But we have that update from Palantir, and I guess we'll get an update on that soon. And then our girl Kathy came back, and she took some profits on Palantir. She sold 124,626 shares yesterday, and she bought DraftKings and AMD. Now, two things. Number one, I'm not going to get super upset at Kathy for selling. I mean, look, it is what it is. The stocks run up. She has an average of like $12 or $15 or whatever, so she's going to take profits. That's fine. The only issue is whenever she sells these winners is that she then buys stocks that like tend to not go up after you sell the good stocks. And so DraftKings and AMD, I mean, look, I don't hate AMD. I also don't hate DraftKings, but DraftKings right here up about 1% of the pre-markets. AMD is up about 1.9%. I don't know, dude. I don't know if you want. I know she's an ETF. She rebalances, yada, yada, yada. But at the end of the day, sometimes you just let your winners run. So It is what it is. But yeah, I don't think anyone should be critiquing her or anything. I mean, like, look, she runs the ETF. Stocks are going to get a little pricey. We all can agree that Palantir is a bit expensive right now, so she's taking some profits. That's fair. But it is interesting that she chose to buy DraftKings with that money instead of Palantir. So we also had another headline right here on Palantir around Peter Thiel selling $1 billion of Palantir stock. Now, this headline came out of Barron's. Wasn't that interesting of a headline, quite frankly, because, and this is kind of how the media operates. They're seeing that Palantir is getting so much momentum, so much excitement, yada, yada. And then they put out this type of a headline. It's not a hit piece or anything like this, but this was filed back in July. This is a scheduled 101B filing, whatever the term is for scheduled sales. And this ends in December 2025. So basically, a couple months ago, Thiel filed a scheduled sale calendar, kind of like what Jensen has right now. By the way, Jensen sold another $53 million worth of shares yesterday as well, to basically allow him to sell up to $1 billion worth of shares, which would equivocate to about 30 million shares roundabout at this price, a little bit under 30 million, about 28 million shares over the next 15 months. December 2025, when he filed it, it was like over the next 20 months. So, I mean, look, it's not that big of a deal to me. At the end of the day, insiders are going to sell. The reason I've never thought insider selling is that big of an issue with Palantir is because they've been selling since the stock was $7. Remember, they have their shares at like a 3-cent average. They've had these shares for a very long time. Someone says right here, I mean, he has to sell some to de-risk his capital. Yeah, like these guys, these insiders, especially someone like Thiel, who has 150 million shares in Palantir, he's been holding for 20 years. Something a lot of people don't remember as well is that Palantir in the early days when they weren't winning contracts, like right now they're winning all these contracts, we think it's amazing. In 2007 to 2010, when they were failing a lot, Peter was bankrolling the company. Like he was putting hundreds of millions. He was just like a free checking account for them to just spend whatever they needed to hire all the developers, because obviously, you know, they weren't getting a crap ton of funding from the venture community. Peter was the venture community for them. So I think when he sells, he obviously deserves to sell. The question is just what stake is he selling? And the fact that these guys have been selling since $7, $8, it's not like they've ever, you know, been apologetic around selling, because they've been in the company for a long time. My question here, and this is the funny thing about Palantir, is if Peter were to sell $1 billion worth of stock, let's say even over the next 3 months, I kind of have a feeling the market would eat up those shares. The appetite for Palantir is so aggressive right now. That doesn't mean it's a good price to buy. I will say that again. I want to be very cautious here. I'm not saying $34 is a good price. $77 billion is an aggressive valuation. I will say it over and over and over again. However, whoever's buying it at 34 is buying it. It's not me. It might not be you in the chat, but it's someone out there. Maybe someone who's just discovering Palantir for the first time. They're like, oh, $34 is $34. They don't really care about the other ideas of metrics. They're just, you know, kind of bought into the story. Maybe long-term investors going long, maybe hedge funds saying, hey, we got to get in before S&P 500. Whoever's buying at this price is buying. And I wonder, 28 million shares sounds like a lot of shares, but Palantir trades like this week so far, it's been about 100 million on average. I wonder how many of those shares would just get eaten up. Let's say Peter sold today 28 million shares at 34 and we dip to 29. I wonder how many people would just buy up all those shares and then the stock recovers back to 32. And it's almost as if Peter never even sold those shares. This is what happens when you have that much liquidity and excitement for a stock. That doesn't mean that it's rational. That just means that, hey, that could be kind of how the story plays out. So we'll see what happens. I do think that Barron's article yesterday got a lot of people scared for no reason. And he's going to sell whenever he sells. Karp is going to sell whenever Karp sells. And if you are going to sell, then you are going to sell as well. It's just a question of, you know, what is your time horizon? And given those guys have been there for 20 years, their time horizon obviously has been holding these for a long time. So those are the updates on Palantir. We have that weird video they put out yesterday. We'll see what they say hopefully soon about what that video means. Kathy sold, and then Thiel had made headlines yesterday, potentially being able to sell $1 billion worth of stock, even though that was headlines months ago. And so we'll see. We'll see how this plays out. Are Palantir buying back shares? They bought back 1.2 million last quarter. I don't know if they're going to keep buying back this quarter. We'll find out in Q3. But we do know they bought 1.2 million shares last quarter. as well. I'm sure so many have their limit order placed to buy Palantir under 30, including me, because that would be a gift. Yeah, I think a lot of people are ready to buy it under 30, 27, 28. So if it gets there, this is the thing about, you can complain it's overvalued, but if people are willing to buy it at a certain price on a dip and on a, semi-aggressive dip, then, it might be one of those things where unless we get a market crash, there's going to be enough buyers at every level to take advantage of it. Especially institutions that want to get in before the S&P 500, right? And they want a cheap price. So it's one of those things where in a crappy September, maybe we hold on to 30 and we survive, and then we just have to figure out the election. And then after that, it's up to the rate cuts to determine where the market is going to go. Yes, but you can apply that logic to any bubble emit. Yeah, that's fair. It's just the caveat I would say is that Palantir is not a bubble based on the fundamentals. So then to say it's a bubble, the macro AI narrative would have to be a bubble, and then Palantir would not have to be able to match the growth that the bubble is commanding, which is at least 30% ARR, which we'll find out in Q3, right? So Palantir to me is not a meme stock. It is fundamentals, real stuff, obviously like massive moat behind it, all that good stuff. But it could be trading like a meme stock based on bubblish behavior of FOMO around AI. So then the question becomes, is Palantir getting an AI premium that it doesn't deserve because all the FOMO doesn't match the reality of the numbers? We'll find out in Q3. In Q2, that definitely wasn't the case. Q2, they smashed numbers. Q3, if they miss expectations, then yeah, if you're trading at 33 times price to sales, you're going to get smacked. So I think it's very important that they hit their numbers every single quarter as they continue to grow into this valuation, because if they hit them or if they slightly beat them, but the street doesn't like it, that's where the theoretical bubble can pop, at least for the short term. But if that happens, again, this is the funny part. Like if we go back to 25, I'm buying more. It's like if we actually have like a 20, 30, 40% drawdown, like people are just going to be, longs are going to be really excited, because unless the thesis hasn't fundamentally changed, we're like, oh, this is great. This is like actually, like, I'm sure there are people in the chat right here, even though a lot of us have been complaining about Tesla the whole year, I'm sure there are some Tesla bulls here that are loving the fact that Tesla is under $400, because you're just so convinced on the story. You're so bought in to the narrative. You're like, nothing can shake your conviction. You've heard all the bear case. Like, you just don't care anymore. You are in Tesla, that you probably buy a couple shares every month, a couple shares every week, and you're just like adding it like it's just part of the portfolio. You don't even look at it, and you don't think too much about it. So I think that's what's going to be Palantir for a lot of people. If we have a drawdown, it's like people are so convinced at this point, they understand the narrative and they know what they're holding, that kind of just doesn't matter at the end of the day. Karp is not going to be on CNBC today. He's going to be on CNBC on Thursday. So not today. I think Jensen will be on CNBC today, but at 10 a.m. But Karp will be on Thursday. Beneficial says, once you build conviction, not marrying the stock, dips are welcome as long as the thesis is supported by the biz. Yeah, and I think the last part of your sentence is important, as long as the thesis is supported. So it's not just buying it because it goes down and you're like, oh, great, there's a dip. But it's like, hey, did it go down for a reason that is inconsequential, aka their operating margins came in less than what the street expected, yada, yada. Therefore, that is an opportunity. Or there's some Japanese yen carry trade that's unwinding, right? That is an opportunity. If the thesis changes, then, things change there. And I think for Tesla, the thesis hasn't really changed. So that's why I think people are excited for Tesla. Oh, by the way, how did I forget to mention this? The 10/10 event is officially happening, guys. It's official. You know how I was complaining over the past couple of weeks of like, hey, is it official? We haven't got the invites. It is official. You can sign up. If you are a Tesla shareholder, you potentially could get invited to the event, and you could potentially go to Los Angeles. So it is officially happening. I'll put this tweet in the chat by Sawyer Merritt. It's a robo-taxi unveiling lottery, essentially. And I'll put it in the chat, and you might be able to go to the event. So again, yeah, I don't think the Tesla thesis has changed, even though things have been delayed, but that's why people are a bit more excited about some of those prices. But that's bullish for Tesla. And now we're going to see what happens in 10/10 and how that event ultimately plays out. Does he think it's Mr. Beast for lottery? Dude, well, I would imagine the demand to be at that event is so big. I think it's going to be a historic event. And so that's why he's excited. All right, 9:30, folks. It is time to open the market. I don't have my cowbell with me, but we have to have some type of a cowbell. All right, the stock market is open, folks. Wake your ass up. Tesla down 1.5% on the day. GameStop down 11%. SoFi down 0.43%. Robinhood down 0.5%. Where is Palantir? AMD is up 1.6. NVIDIA up 1.82. S&P is down just a little bit on the day. Palantir down 2%, 3402. So it's testing that 34 level. And we'll see what happens with 34 and 23. Someone called it a Temu cowbell. That did sound like a Temu cowbell. Apple at 220. Bank of America. Oh, by the way, your boy Buffett sold again, dude. I mean, if we do have a cataclysmic recession, no one can say Buffett was not telling us. No one can say. He sold another 5.8 million shares yesterday at 230 million. So now he's sold about 6.5 billion worth of Bank of America, which is why Bank of America is probably down right here, 1.52%. The CEO was asked about the selling yesterday, and he said, we can't ask Warren Buffett why he's selling our stock, and we would never want to ask him. So that was the CEO's comment. He's like, we can't ask, and we don't want to ask. Now, if I was the CEO and I was on CNBC and someone asked me why someone's selling 6.5 billion of my stock, I would be like, yeah, I'm texting him, but he's just not responding. He's leaving me on red. And maybe publicly he'll listen to me now that I'm on live TV. Hey, Buffett, can you text me back? Why are you selling the stock? That's what I would do, because I would want to know. I'm just like, if I'm a public CEO and you sell $200 million worth of my stock every other week, I'm kind of like, yo, buddy, can you tell me what's going to happen since you know this game better than me? Like, what the hell's going on? But Bank of America down 2% on that. Again, Buffett is raising close to $300 billion in cash at this point. Broadcom 147. Wow, nice recovery on Broadcom. The stock was at 132 last week. A little bit of recovery right there. Google's at 151. Oracle, wow, 52-week high on Oracle, 156, $430 billion market cap. Holy freaking crap. Wow, Robinhood, 1%. Is Robinhood getting some of the metrics, August metrics love? Again, those metrics were pretty good. They weren't as good as July, but they were pretty damn good. So maybe the street's kind of looking at that a little bit more. Bitcoin's falling while Robinhood's going up, which is bullish, because that means it's decorrelating a little bit from Bitcoin. Palantir below 34, 33.94 now, down 2.37% on the day. Apple at 222. Wow, Apple's up 1%. Okay. Maybe this is a repeat of WWDC where they pump after the event. QQQ up on the day. IWM, small caps cannot catch a bid. Small caps cannot catch a bid yet. Adobe, they'll have earnings tomorrow. They're down just a little bit. Dell is up right now, 107.25. For those that are just joining, CPI was at 2.5. The reason the market's not mooning right now is that core came in at 0.3, and that's why the market's upset, because we wanted 0.2. But yeah, S&P 500 going red right now. But CPI went from 2.9 to 2.5, folks. Inflation's, I don't want to say it's literally dead, but it is dying. And now it's about unemployment. Wow, Robinhood, $20. All right, so I guess those August metrics are kicking in, because Bitcoin's down. Bitcoin down means Robinhood shouldn't be up, and the market is falling, which means Robinhood shouldn't be up. So the market's giving Robinhood an independent valuation of the macro right now, and that maybe is because of those August metrics. Also because they brought over that 1% match, and that might be incentivizing the market to think net deposits will go up. Apple at 223 right here, up 1.2. Where's Tesla? Tesla, again, was named as the top pick by Deutsche Bank yesterday at 295. Tesla's falling 1.7%. Not sure why Tesla's down. Maybe a little bit of the Trump stuff from yesterday, given Elon and Trump are a little bit cooler. And based on DJT, it seems like the market is saying that they didn't think Trump won the debate. DJT down a nasty 17%, dude. Still valued at $3 billion, even down 17% on the day. But that one's taking it on the chin. But I don't think that's the real reason Tesla's down. I think Tesla ran up yesterday, so maybe the market's just giving back some of those gains. Is Berkshire Hathaway up? Let's see if value's up today. Berkshire is down. United Healthcare, is that up? United Healthcare, UNH, that's down as well. Wow, so value's down. Okay, defensives are down. Mag 7 is up, besides Amazon and Tesla. Interesting. Besides Amazon and Tesla. Someone from Charles Schwab called me last night to convince me not to switch to Robinhood. He said, what if we can lower the margin rate to something comparable? Yeah, so someone also texted me that when they tried to switch, they got a message back from Schwab. And they said, hey, I'm trying not to switch. Hey, let's try to make sure you don't switch. And they're trying to keep people, but he sent me his response to the guy, and he basically told him that basically told him to fuck off. I'm going to Robinhood, but he said it in a nice way. He said all the problems with Schwab, and so I mean, look, it's your decision at the end of the day. If they lower your margin rates and you like staying on Schwab, then stay on Schwab. But obviously, I'm biased here. I think the 1% match on Robinhood, the user experience is a lot better. So. But see, dude, if I were you, I would go back to the Schwab guy and say, hey, can you give me 2% to stay? Can you give me 2%? Right? That would be my kind of like negotiating tactic. Like, hey, if you don't want me to go to Robinhood, give me 2% or give me 3% of your money. Because if they're going to start losing a ton of people, they might make exceptions for customers they've had for a while. So use it as a bargaining chip and see if you can squeeze more money out of them at the end of the day. Because you know, they have the money to give out. It's just a question of if they value you enough to give you it to keep you there. Tesla's down 2.3, Nvidia's at 110, Google's at 150, Microsoft's 415, Apple at 221. Apple getting a little bit more of a boost now on the day. The fees add up on Schwab. Yeah, that's what my friend said. My friend said he can't sell options without having to pay 65 cents on Schwab. And it's annoying. Like if you sell 10 covered calls, I have to pay 65 cents to sell. Like it's just, you know, on Robinhood, the fees are 3 cents. And the reason they're 3 cents is for regulatory reasons, not even for revenue reasons for Robinhood. So that is another reason my friend left. Okay, S&P falling 0.5%. So CPI news not really helping it that much. Nvidia 110, AMD 144, Bitcoin falling as well. Broadcom 148, Oracle 157, Google at 150. Oracle's catching a bid. Google's getting a little bit of momentum. Ulta's selling off. Alpha selling off. Alpha had a horrible week starting on Monday. GoDaddy's selling off. Intel selling off. Wow, Intel below 19. Snowflake at 109. And then all the crypto stocks selling off besides Robinhood. Zillow is down 2% as well. Oh, by the way, guys, this is the type of shit that makes me feel like we're in a little bit of an AI bubble, to give you guys some other perspective. So here's a company. You guys remember how I told you guys I was going to start bringing up like new startups that are kind of justifying the hype on AI? This is a startup that I don't think is justifying the hype. This like random co-pilot company called Glean just got valued at $5 billion, and they raised $260 million by none other than our boy who put half of his portfolio in Snowflake, Brad Gerstner. I don't understand why they are putting so much money into co-pilots with retrieval augmented generation, ChatGPT wrappers, essentially, that are slightly optimized for an enterprise and giving them these multi-billion-dollar valuations. I don't get it. I just don't get it. I sent this to a couple of data science people yesterday, and I was like, hey, is this legit? Or like, is it as much bullshit as I think it's and as I think it is? And they were like, yeah, it's bullshit. Not saying like Palantir is going to beat this random startup or whatever. It's just, it like these chat bots are not where AI is going to become hundreds of billions of dollars of value, right? Like and it seems like these companies are like creating these chatbot wrappers, and they're saying they're AI plays, and then they're raising at billions of dollars. And it's like, there's no way that's sustainable in my opinion. Now, granted, the opposite side of that, to give it a bullish perspective, is that there's so much demand for AI. There's so much money flowing out there. There's so many companies that need these kind of like random co-pilots that they don't need a Microsoft or Palantir Foundry or whatever. They need a company like Glean that raised that at $5 billion, and that's how Glean's gonna make money. So Nvidia's up right now. Is Nvidia running? So maybe that's a bull case for, you know, some of these AI names getting more momentum. Nvidia, wow, Nvidia's up 3%. Again, every percent for Nvidia is a big deal because this is a close to $3 trillion company. All right, Nvidia getting some momentum. Yes, we talked about Buffett. He's continuously selling Bank of America. Again, it's just so funny, dude, because like if we do have a really bad recession, Buffett's just going to be looking at us like, guys, like, I publicly sold a lot of my shit. I don't know how much more clearer I had to be other than publicly selling a lot of my shit. You guys chose not to listen. It is what it is. But in reality, I think he's seeing a better opportunity than Bank of America. Remember, he had these shares since 2008. He's had these shares for a long time. And he's still the largest shareholder in the company. He owns like 40 billion worth of stock. So also, if Kamala gets elected, maybe he wants to take some profits before his taxes get jacked by 7%. That might be another reason that he's doing that. Amazon is down 1%. I don't know why Amazon's down. Let's see if we can get some updates on Amazon. We did get a bunch of price target upgrades on Google. So the street's starting to get a bit more bullish on Google. Goldman said 217 is their price target. They said public cloud, balancing top line growth with cost disciplines, and management laid out 5 categories with generative AI capabilities. That's why we're bullish on them. And then Truist also said buy at 196. Monetization of generative AI searches will start to become more exciting. So the street's getting a little bit more friendly at these levels when it comes to Google. NVIDIA right here, 111, 2.4%. 2.4% on the day. The chat is buying NVIDIA after hearing Kris is bullish. Yeah, exactly. Guys, Kris is bullish for those that are just joining. Let me see if I can I gotta see if I can call him. We gotta get his perspective. Let's see. Let me give him a call. Let's see if he picks up. Let's see. He saw those Oracle numbers and he was like, you know what? I'm a little bit more excited about NVIDIA. Yeah, running right here up 3%. Did Kris buys NVIDIA this morning and that's why it's running? He might not be able to pick up. He might be sleeping right now. Yeah, he's not going to be able to pick up. Either it's the top if Kris is super bullish on NVIDIA now, or NVIDIA is just so impressive that it got Kris, who has been a bear for like 5 months, to become bullish on NVIDIA. It's one or the other. What do you guys think? Put in the chat. Is it the top because Kris is bullish, or is it NVIDIA is just so good it could convert Kris? What do you guys think? Let's see what you think. CPI came in at 2.5. CPI came in at 2.5 for those that are just joining. HIMS is up. Oh, that's good because TJ and I have puts on HIMS that were in the money. Wow, that's up a decent amount, dude. Our puts were in the money yesterday at 13.50. Now our puts are out of the money, 14.89. Huh? Not bad. 14.89 on HIMS. Yeah, there's some momentum right there. SMCI is running. SMCI. Oh, you're right. SMCI is running with NVIDIA a little bit. Let's go to the semis. I think semis in general are doing good. Yeah, look at that. The only semis that's down is Intel and Broadcom, and those are barely down. Everything else is green today. Wow, market's buying semis. You know, that's interesting. Okay, so one logic for why this is happening is the debate happened last night, and the perception based on DJT, I'm not saying this is not my opinion, this is based on DJT being down 17%, is that the market may be saying, hey, we think Trump lost. Trump was bad for the semis because he's going to impose, or at least he's publicly said, he's going to do a lot of tariffs. Companies in Taiwan, across the entire world, those semis would obviously impact all of these semiconductor supply chain companies and the broader semiconductor supply chain ecosystem. That's why Intel went up that day that Trump said we're going to not care that much about Taiwan, because then you would think demand would shift more to Intel. And that's why Intel was randomly up 5% that day. So maybe the market is saying here, we think Kamala is going to win and semis are more of a Kamala play than a Trump play. That could be an argument. Is Bitcoin down? But on the flip side, if Kamala wins, obviously Bitcoin she's not been as supportive of that. That's why Bitcoin's down 1% right now. Now it's not down as much as, some people thought it would go down like 5% if Kamala won the debate. It's down, but it's not like, back down to 40,000 or something. So you've got maybe the Kamala side of the market saying, hey, we're going short Bitcoin, long semis, based on if they think this debate gave her higher chances to win. Potentially. That might be one explanation for this. Also, Jensen speaking today on CNBC, maybe that's just another expectation. He's going to talk more about what he's going to say. What else do we have? You know what would be the funniest thing? Whoever gets elected, it would be the funniest thing if the market's just flat. Like if we wake up on November 5th and Kamala's the president and the market just says, okay, we'll move on. Or if Trump's the president and the market doesn't have this God candle that people think the market could have. I think that would be the most healthy thing if the market just doesn't care and we just go forward, and earnings and macro is what determines the fate of the market, not literally the election. But as of now, I think it's too early to say that. As of now, it's going to take some time to digest it. Palantir 34.08. Dude, Palantir is not giving up 34. That's incredible. Palantir is not giving up 34. The amount of people yesterday on Twitter that I was just reading and looking at people talking about Palantir's overvaluation because I want to get other perspectives. There is a decent amount of FinTwit which is like what we call financial Twitter, that is thinking Palantir is an obvious short right now. Like there are people saying like, okay, it is time to short Palantir. Like this is ridiculous. And maybe they're right, but again, it's a little harder to justify shorting a company like this. So we have this guy here says, okay, now short Palantir, 1 year horizon. I think Palantir is a 33% pullback at least, meaning a year from now, he thinks Palantir is down 33%. He says, shorting the most expensive SaaS name usually is free money, plus a heavy retail investor base, price to sales of more than 33, S&P hype, setup is decent. Look, maybe they'll be right, but I don't know, dude. The shorts have been high on blow for the past couple of years. It's not worked out. I guess we're going to see if it works out this time. But I would not want to be short Palantir, dude. I mean, I know the setup, theoretically, objectively, I can say, yes, the setup looks decent, that it's given just the valuations. But that's where you got to understand the actual thesis. And that thesis, again, that Bank of America report, I'm going to make a video on that later today, and I'll talk about what Bank of America said. People need to read that Bank of America report. That Bank of America report, and again, it's on my Twitter. Just scroll down a little bit. You'll see the full report. Or you can just wait for the video when I talk about it today. That Bank of America report was the most bullish report I have seen in terms of discussing Palantir. Dude, Bank of America said Palantir might be a player in quantum computing. Either Mariana was sipping the Kool-Aid way too hard yesterday, or she really thinks that Palantir is a gem and that S&P 500 inclusion is just the beginning of their journey. Like, I think the street's bought in, and if you want to short, you have to short against the thesis that is evolving as we speak. And, you know, you can say the valuation is crazy. I'm not going to argue with that. I just think shorting it is a little bit of a tough game because stocks can continue to stay expensive. Lena says your eyebrows are nice. Thank you. Thank you for saying my eyebrows are nice. And when I was at my barber, he's like, yo, you want me to just freshen up your eyebrows? And I was like, yeah, usually they just like, you know, they just like freshen up on the edges. This dude, I mean, this guy, he like maybe looked like a model or something, dude. I didn't have my eyebrow. Usually they just like clean it up a little bit, so there's no like unibrow or something. But he just went all in. I was like, all right, buddy. I guess I now have sexy eyebrows or whatever. Rocket Lab right here is up a little bit on the day, up 4%. Nvidia still holding on to 3%. S&P's down and Nvidia's up. That's interesting, dude. S&P's down almost 1%. Nvidia's up 3%. Very interesting. Very, very interesting that S&P is actually... Why is everything tanking except tech? Yeah, I'm trying to figure that out right now as well. Crypto's tanking, value's tanking. We need to make a value playlist. We haven't done that yet. I'm just going to call this value. Okay, so let's add a bunch of names. Put some tickers in here because we should have this. I should be able to go to this every day. So obviously Berkshire. Let's put Berkshire. Put tickers in the chat. Berkshire. Okay. UNH. AXP. Visa. Coca-Cola. What else? Verizon. You can add Verizon to this. Value's down. We're seeing a lot of it. We can add AT&T. By the way, did you guys know AT&T is up 44% year to date? Or not? Is it year to date or is it year over year? AT&T is up. No, it's up 23% year over day. Yeah, 46% over the past year, 23% year to date. And you got the dividend. So AT&T has been a loser for a lot of years. This year, it's been okay. It's not been too bad. We're not putting Nvidia in the value play, dude. We're not putting Nvidia there. Nike. Oh, we got a report on Nike. Nike's probably down. Yeah, dude. One of the Chinese manufacturers in Nike in China that sells a shit ton of Nikes. They put out their kind of earnings or whatever, and it was bad. It was not the best. So that's why Nike's down. All right, folks. I'm getting a call. I'm getting a phone call. Let me pick up that phone call and see who it is. Christopher Patel. Hello.
What's going on, man? How are you?
I'm doing well. I'm live on the Market Open right now. There's about 2,000 people here with me. And I just called because you made some news yesterday based on some things you said. And I was wondering if you could give us 10 minutes of your time and explain a little bit more on some newfound ideas that you have come to.
I'm overall, I've kind of changed a little bit of for at least for the medium term, a little bit more bullish on NVIDIA. Number one, I thought the CapEx cycle was going to start to weaken, and that doesn't seem to be the case. If you look at Oracle's earnings really highlighted just where we are when it comes to the NVIDIA earnings story. And so, yeah, you won't get 100% year over year, but, 30%, 40% year over year growth for the next 3 years, 4 years is actually really possible. In which case, if you look at like NVIDIA on a forward basis, it's relatively cheap. So what Steve was saying is kind of true. The only thing is, I'd say that this is one of those things where it's going to be like a little bit of a hot potato with volatility. So as long as you know that, and you go into it when you buy things at cheap prices, like when you have like NVIDIA taking these dumps about $30, $40, and you can actually make some money buying into it now and riding it higher. Understand that there is a possibility to make money trading this, not necessarily super, super long term forever, because eventually the growth rate will moderate and might eventually decline as well. So you just have to keep your eye on the demand picture. So this is very much like the Celsius story, where when Celsius was hot, everyone was buying it, and then when things started to cool off, Celsius got sold off. So just be on the the more cautious side with NVIDIA.
So I think it was pretty cool when you were talking about this in your Discord. And again, guys, Kris has a Discord, Patreon. I'll put his Twitter in the chat for those that want to join it. But when you said, hey, I'm looking more at NVIDIA now because of Oracle, it made sense to me, because when I listened to Oracle yesterday, I was like, dude, these numbers are kind of ridiculous. So what did you see in Oracle that kind of got you to think, hey, I mean, you can say NVIDIA is a little bit of a bubble, but it might last longer than what people think?
Well, one of the things was CapEx cycles are something that are a lot more elongated than something that's software, So basically a lot of the determinations on CapEx, you got to make them a year out, maybe 2 years out. So a lot of what we've already heard was the hyperscalers were getting bullish on this thing and buying as much hardware as possible. And now you're starting to see like tier 2 and tier 3 level companies starting to also get like a little bit more bullish on CapEx spend with NVIDIA. And right now, yes, there's competition out there that's, trying to get to NVIDIA, but from a software perspective, NVIDIA's got like a moat around that business. So, there's definitely a lot of value in NVIDIA right now that a lot of people may not necessarily be looking at. And I think some of the recent drawdowns have actually been helpful to get the valuation a little bit more tempting. But once again, the way that I would phrase this is there's a higher chance that this thing gets to 150 than it does back down to the 50s again, especially with all the cash flows that are coming in and them buying back shares. So I would say just, if you basically this is a determined bet at this point. And the direction that I would say that we're more likely to go with NVIDIA is on the up, not the down.
Do you think the parts of AI that I agree with you are very bubblish are not going to matter as much because NVIDIA is still at the epicenter of where all the CapEx spend is going to be? So even though it is like OpenAI probably is not worth $100 billion theoretically, it doesn't matter for NVIDIA because NVIDIA is going to sell them all the chips at the end of the day.
I mean, it's definitely possible. So there's a lot bit more of an ecosystem play when it comes to NVIDIA that maybe people are not necessarily giving a lot of value to. And I was in the same boat for a while. I was just like, these chips are interchangeable. Competition comes and you'll have, people substituting another company's stuff. And that doesn't seem to be the case at all. It actually lends NVIDIA to be more of a, like a golden shovels play. And so right now, as far as I can tell, there's no other shovels that can even come close to it. So, yeah.
Okay, that is fair. Quick thoughts on Buffett selling Bank of America. Is he telling us there's a recession coming?
Possibly. He's just raising capital, basically. He's raising capital in order to buy something at more attractive prices. That's the way I see it. Just one thing, by the way, in your value portfolio, you listed a few companies on there. They're not value companies. Like Visa's not a value company. It's trading at like a 33 PE.
I went from the perspective of people will not sell off Visa during a recession. Is that the best definition for value? How would you conceptualize value?
Value is supposed to be like low PEs. You've got like the 10, 11, maybe like even some PEs that are like 8 and below. And the thing is, their growth rate is not excessive. So they're not growing like 10, 20%, 30% per year. You have like low growth companies, but they have good earnings, right? So basically from a PE standpoint, they're low PE. So as an example, like Verizon would be a value play. right? The PE on Verizon is like what, like an 8 or something, or a 9?
9, yeah.
You know, but you can't just, by the way, you just can't use PE also, because there are times where you have to look at things from a cash flow perspective, because a lot of times the net income can be a misleading number. So instead, if you look at like operations from cash, that could be like a lot more of a telling sign that this is value. And then also you have to look at the balance sheet. So, you know, if let's say right now a company has 100 billion in assets, right, and liabilities are only like 20 billion, and now you have 80 billion in equity, but at the same time the stock is trading at, you know, $50 billion in market cap, that means that there's actually equity there. Even if from a net income standpoint, the net income could be negative or flat, right? So a lot of times there's different metrics that you can use to basically determine if this is a value play. But most of the time, the traditional sense is like just lower growth, low PE stuff, and also like things that are discounted compared to its equity value.
Okay, so on NVIDIA, do you have a price where you start buying? Have you already started buying? How are you thinking of developing a position here?
I'm playing NVIDIA with spreads. Basically, it makes a lot of sense to be in it via spreads. One, I already started buying some calls on NVIDIA, waiting for a run up, and then once the run up is done, I'm going to sell some calls, especially when IV jumps and RSI jumps up to like the 25s and above. That's when I'll start selling what is that thing called? Start selling calls against them at what do you call it? Out of the money calls against it. So this way my spread will be as low as possible, in which case I'll basically be cashing out of my original long calls with a pretty healthy margin, and then use that to do other things with. So like right now, if you look at NVIDIA is trading at 110. You could buy the call option for NVIDIA at 110 right now for, let's say, 2026. And basically this thing runs up to like 2030. Then you could sell like the 150 call for close to the premium that you would have gotten for that 130 call early on, or a 110 call. Let me rephrase, the 110 call. So it depends on when the market kind of like flips. Right now you can see, like, from an RSI perspective, NVIDIA is like at a low RSI rate. Yeah. Well, there you go, at a low RSI, but eventually the RSI is going to jump up. So,
Okay, last two questions for you. CPI 2.5, is inflation officially dead?
Say that again, I'm sorry.
CPI coming in at 2.5. Do you think inflation's officially dead?
I mean, the thing is with headline CPI, it's definitely retracing, but that's because oil, natural gas, and like energy prices are negative right now. Used cars are down as well. So there are parts of CPI that are more quote unquote transitory that you can't rely on. So that's why you have to look at core. And the thing is, core is relatively flat. So it's at 3.2. So that's why the 10-year right now, what is the 10-year doing?
I was about to check
10
right
years.
Now. Oil's at 66 today, dude. That's incredible.
Yeah, especially when you compare it against 2022 when it was like at 120s. It's really discounted. So you can see right now the Treasury, the 10-year Treasury is pretty flat.
Yeah,
which is not a good sign, but it's not a bad sign either. So right now the debate that everyone is kind of having internally is, okay, are we going to get a 25 basis point cut, or are we going to get a 50 basis point cut? Oh, by the way, I meant the RSI over 70, not 25. 25 is when it's at the below part. Just rephrasing. But yeah, I think overall right now, we are in a slow glide path towards disinflate, like maybe possibly even some deflation if things hold up the way they are. But right now, there's not really much you can do in terms of like trying to predict what's going to happen. The only thing that I can basically make some determination on is I'm going into more fixed income stuff and locking in a lot more yield right now while I still have the opportunity. Because I think there are certain sectors and industries right now, their entire business models have been basically smacked down because of the higher interest rates. And the thing is, when you take away higher interest rates, which is most likely going to be the case next year, depending, based on what the 10-year is doing and all the other, what is that thing called? The corporate debt actions that are happening right now, you're going to see a lot of earnings improvements next year and the year after that. So Right now, I'm looking for capital-intensive businesses with healthy cash flows, predictable cash flows, where the margins on the business are going to improve dramatically because of interest rate changes that are going to be on the upside, right? So if you look right now, like as a good example, like Verizon, right? Verizon has probably the third most indebted company on the planet. I don't know if you know that.
Yeah,
like,
yeah, they have a lot of debt.
Yep. So they have a lot of debt. So the thing is, a lot of people, they're worried about Verizon because they're like, oh, well, look, they have all this debt. What are they going to do? But at the same time, NVIDIA, I keep saying NVIDIA.
You're too much of an NVIDIA bull now, dude. It's in your soul. It's there.
Verizon has a crap ton in cash flows, which can easily service that debt. So the key that we have to remember is that there are tons of businesses out there that basically, they don't make a lot of money, but the scale at which they do it is tremendous. And the thing is, they require a ton of capital investment up front in order to generate that cash flow. But the cash flow is steady. And that steady cash flow is what's going to determine the price of that stock and the earnings. So, when the market moves, the market is looking at, okay, how is this company going to be able to service that debt? Now, what prices are they be able to service the debt? So as they're able to service that debt, or if the debt becomes cheaper, that means that now more money can be freed up from interest and instead go to equity holders in the form of either dividends or share buybacks or X, Y, and Z.
All right. So last question for you. If you're getting bullish on NVIDIA, I would imagine after S&P 500 inclusion, is there any part of you?
No.
But why? If you're bullish on NVIDIA, how, is there nothing that takes you back to Palantir?
No. That's it. No.
So you think 34 you wouldn't start a position at 34? You wouldn't?
Nope, would not turn anything. Nope. Look at the RSI right now, even in the short term. RSI is just do it like a 1 year RSI. You can already see that this is at peak. Not doing it. Not going to do it.
Okay, but do you think S&P 500 matters at all?
No, it doesn't.
Really?
When did Tesla? Tell me, when did Tesla get included into the S&P 500, and how did they do after that?
I mean, yeah, they tanked after that. I get it, but
right. So
that's also because they got included during interest rates that were 0%.
Yeah, and remember, one of the impacts that people keep forgetting is just because they get included in the S&P 500 doesn't mean that all of a sudden now all this new money is going to come in. There's also a lot of indexes that are going to drop Palantir because they were in the mid caps, and the mid caps are going to dump it, and now you're going to get uptake in the S&P one, which of course is a broader, much bigger market, but at the same time, the total impact is not going to be nearly as much as people think. And right now, I'm not buying something at the top of the range. And I mean, look at the PE on this thing right now, 200, and about 40% of their net income is coming from interest on the cash that they hold on the balance sheet. All the while, you got Karp and Thiel and all the board of directors. They're all selling like there's no tomorrow. So anyone that wants to buy Palantir, good luck. Buy it. It's up to you. Not a big deal to me. But I personally, I'm not looking for plays like that. And any sign of additional slowdown in Palantir will get this thing smacked down. It's just very expensive. It can, and by the way, you were right. It can get even more expensive than this. But I'm going based on directionality, and I would not feel comfortable holding this thing long term at the current price. And the thing is, I'm looking for return. So I'm not going to sit on the stock for the next 5 years waiting for this to get back into a more balanced value. So,
okay, actual final last question for you then. Google, there's a big debate right here. Is it attractive at all at this range?
Look, Google is very attractive. The only thing is they have a lot of regulatory issues that are happening. So that might result in some multiple compression, right? And that's about it.
But you don't think the multiple compression has already happened at 19 forward earnings?
Not necessarily. There still could be some further downside, just because, like I said, the market is a lot less forgiving when it comes to sentiment for Google, primarily because they're literally in the headlines every day. Like right now, the EU just came out and said that what is that thing called? They're fining Google a couple $3 billion for antitrust. So the thing is, all the regulators, they look at these companies and they're just like, okay, this is a piggy bank that we can kind of keep knocking on. So I'd say Google is definitely a value play, but right now the sentiment is very much against them. Just like I said, there are times where the question that I honestly have is does Microsoft fucking own these regulators? Right?
That's a good point.
You have to figure this out. Like, is Microsoft a bigger monopoly than Google, or is Google a bigger monopoly? Like, which one is the actual problem? Like, when you look at Microsoft's been able to get away with a lot of shit, dude. A lot.
They got away with the Activision Blizzard stuff too, to an extent.
Yeah. And no one is calling them out on anything. So my question is like, wait a second. I thought Microsoft was the monopoly back in the day, and they still control so much of certain markets. I don't know. I think that there's a lot of politics behind the scenes that are happening that we are not necessarily aware of. And yeah, we'll see what happens. Maybe Google didn't pay their dues to Lena Khan and her cronies. Because I'm telling you, as the days go on, I realize that there's so much crony capitalism happening in the background, and people feel like, oh no, politics is not involved in economics, and I'm just like, yeah, okay, we'll see.
All right, Kris, thank you. Appreciate your thoughts. His Twitter will be in the chat, and I'll talk to you pretty soon.
Take care.
Take care. Have a good one. All right, folks, there we go. So we got two things from Kris. A, we got his bull case on NVIDIA. So for everyone who's an NVIDIA bull that got super annoyed or upset every time Kris came on my show and he was bearish NVIDIA, you got your pivot today. You got the pivot. Maybe one day we get the Palantir pivot, but I think it's going to be a little tough to get the Palantir pivot on Kris. If S&P 500 inclusion is not going to do it, I don't know what's going to do it. So from that perspective, it is good to kind of see his thoughts on Oracle, CapEx spend, what it means for NVIDIA, playing with options. I think that 150 range is not horrible by 2026. I mean, if NVIDIA doesn't get there by then and they put up $4 of EPS, it would be egregiously cheap in my perspective. So you would imagine 140, 150 becomes fair value if they get $4.50 to $5 of EPS by 2025. But we're going to have to see if that plays out. And then for Palantir, again, this is where, Kris did make a good point a couple weeks ago when he was on the show. If a bear speaking about a stock lowers your conviction in the stock, then you don't have any conviction. So, I've dealt with this with Kris for the past year, right? Or 2 years, because Kris sold out at like $8-9. And then I think he entered and he sold back at like 15 or whatever. And, Kris is a good friend of mine, but on this one, I had to disagree with him. And it is what it is. So, Kris coming on the show being bearish on Palantir, that shouldn't be a reason, if you actually are bullish on the company, that turns you bearish. But I think the point he brings up about valuation is a fair point. I've been saying valuation, yes, is getting up there. However, one thing we both agree on, it can get more expensive because at the end of the day, stocks trade based on what people are willing to pay for them. And if they're willing to pay a little bit of a higher premium, then stocks can go higher. Amit, where are you? I missed the early part of the stream. I'm in an undisclosed location. I cannot say where I'm at yet, but tomorrow you guys will find out where I'm at. But today I cannot officially say it yet. And I think we're going to be able to do the market close today, guys. I can't, no promises, but I think based on how the schedule is looking, I think market close would have to start at what time? It would be 1:30 is 1 o'clock is 4 p.m. 2 o'clock. Yeah. So around that time range, I think we should be able to do the market close. All right, let's get an update from CNBC. Let's see what they have to say as well about CPI, and then we'll keep going from there.
Still pays very close attention to inflation. Came in a little bit hotter than expected, and that's the story of the day. The Nasdaq's faring a little bit better. Technology is the only sector that's higher right now in the market, but let's talk about that inflation number, because overall the headline was not too bad. 2.5% is low, and it was a step down from 2.9% we got the prior month. But again, it's core. And it's core rounded, which is what we're doing lately. And that was 0.3%. That's if you strip out the volatile food and energy. And we know the Fed pays attention to that. And one of the big culprits, guys, is shelter, which rose 0.5% on the month. But even if you take out shelter.
That's owner's equivalent rent, right?
It's part of it.
I was asking yearly about. I didn't get much of an answer.
No, it is. It's owner's equivalent rent and first-time housing.
Right.
And you don't want to see that go up. So that's the shelter up 0.5%.
But it never goes down.
But, most people say it lags because there are so many other indicators we watch where rental prices are coming down and where house prices are coming down.
I guess that's why there's this expectation that it is going to start to give, and yet it hasn't.
And it also has a outsized influence on CPI. It's about 1/3 of the overall index. So, yeah, there are all sorts of reasons that maybe the Fed shouldn't only targeting that. But as I showed there, you know, the apparel prices ticked up on the month. Airfares, actually, after a few months of coming down, ticked up on the month. Transportation services, airfares is in that, but also those car insurance rates are still like crazy
Incredibly high.
Energy was down. That's good. Overall, look, it jives with the recent trend that inflation is not necessarily bubbling back up again, and that, you know, things are coming down from the high levels where we were. But if you were going into today thinking the Fed's going to cut 50 next week, you probably are thinking, okay, no reason to do that. They're probably going to cut 25. You didn't get it from the CPI report. You didn't get it from the jobs report last week that there's any urgency to go bigger on their rate cut next week. And that's what the market is reflecting. And bonds got a little excited, perhaps overly excited about rate cuts as they've done in the past.
The JP Morgan desk today points out that the growth scare in August was eased when we got those retail sales numbers. And of course, that's the next big thing that's coming on our plate to see if this particular growth scare this month can be dealt with the same way.
Because everyone wants to know what's going on with the consumer. If you read the Beige Book, you think the consumer is going into recession. If you listen to some of these earnings reports, everything's fine with the consumer. And if you listen to others, the consumer is really weak. You know, yesterday I was at this banking conference.
Yeah, actually, I know you're going to have some stuff on the consumer. All these stocks are down again. You were at that conference yesterday. Doug Pinto obviously sent JP Morgan shares down with some comments about trading and investment banking that were not what investors had anticipated. I'm just curious as to what else you sort of were picking up. Obviously, the consumer also is a concern. Ally Financial, things of that nature in terms of declining credit quality.
Yeah, that's what I wanted to pick up on. Ally warned that delinquencies and impairments were worse than expected on auto and credit card loans. So, you know, I asked CEOs of some of the biggest U.S. banks, Brian Moynihan, what's going on with the consumer, if he saw that as well. And I think you might be pleasantly surprised to hear what he's had to say.
This is Bank of America CEO on the consumer.
The consumer's not getting worse right now. They're very stable.
Because Ally Financial this morning at this conference warned that auto and card delinquencies were worse than expected.
We're seeing them come out where we thought they'd come out, and they basically delinquencies have gone back to where they were more or less in 19.
Dude, I mean, Bank of America, look at that. Again, we've been talking a lot about the consumer. He's straight up saying the consumer's fine, dude. Like they're not in this catastrophic issue people think that they're in.
So not getting worse, actually stabilized. And then Barclays, which has a big U.S. consumer bank as well. Here's what the CEO said about the consumer.
We still see good numbers in terms of impairment in our cards business. Now, we anticipated some of the rise, the modest rise in unemployment and the inflationary pressures. And so we managed the risk in our book in advance, we hope reasonably well. But I do think that there are signs of softening, and you've got to be attentive to it. We have a higher quality book, and we look to risk manage it well. So I'm happy with the results we've seen so far.
Both of those CEOs, David, suggesting it's not terrible.
No.
I mean, Brian Moynihan even pushed back on the whole stagflation idea that Jamie Dimon brought up yesterday.
And he has done that in the past. He has typically been more positive, and we obviously featured Dimon yesterday when you and I were doing the show, in terms of yet again making comments at least about, well, you never know, we could still see inflation rear back up, although no real signs that he's been right so far. I'm curious, though. I mean,
so again, I mean, it continuously feels, by the way, that TV does have a ton of wires behind me, dude. I don't know why it has those many wires, but whoever pointed out in the chat, that is correct. I don't know why it does. But yeah, dude, at the end of the day, it feels like the consumer, you got two really big CEOs saying, hey, the consumer's not in a horrible situation. If we avoid a recession, dude, and we get the right rate cuts as inflation comes down, pound it right here at 34.17, I don't think it's going to be that tough of a situation. SMCI at 415, Microsoft at 413, Google at 150, Walmart at 78, Nvidia right here at 109, Rocket Lab at 638 on the day. Am I in India? I'm not in India yet. I am not in India yet, but in October we will be in India. Not in India yet. You guys will find out tomorrow, dude. You'll find out. I don't mean to be mysterious, but like legally, I can't really disclose it yet. So tomorrow, all will be revealed, and you guys will know. SMCI at 413. Bitcoin taking a nasty dump though. Bitcoin down 2% right here. It was at 57, now at 55. So we're seeing a little bit of downside right here on the biddy of the coins. Rich Buddy says the price of a modern Rolex Daytona was 40,000 2 years ago. Today is 25,000. Process that consumer data. You know, I saw this stat. I thought it was interesting. By the way, we got Jensen speaking in 5 minutes, so we'll listen to him and then we'll end out the show today. Is it because people just don't want to buy Rolexes as much? Like, is it people just thinking, hey, like luxury watches are not as valuable as like Bitcoin or gold or something? Rolex tend to, you know, S&P, by the way, down 1.2%. Rolexes tend to go up in value. And if they're going down, maybe it's a problem with Rolexes versus like the broader way a consumer conceptualizes it. Or maybe people just don't find value in it anymore in terms of the luxury watch index. Maybe like the brand of the Rolex is what I'm trying to say. Like Richard Milles, for example, are overtaking that brand. Now, I think that I'm skeptical of that because Rolexes historically have done very well, but it is weird that they're starting to go down. GameStop, by the way, down 15%. It's GameStop getting destroyed. All luxury brands tank. Yeah, especially if you kind of think you're in a recession, luxury brands, I would imagine, would not do amazing. Rich says, I'm a watch collector. It's a sign of consumer spending. Okay, well, hold on. I think that's fair, but the average consumer is not buying a $25,000 watch, right? So yes, it's a sign of consumer spending, but is it a great sign of consumer spending? Because like most consumers aren't buying Rolexes. So how accurate is that as a metric for the consumer? It's a great metric. It's a great measure of discretionary spending. Dude, I struggle to believe discretionary income is being spent on a Rolex. Like for some people, yeah, but for the majority of people, if you've got some discretionary disposable income, like, you know, maybe you get a new iPhone or something, buy a $25,000 Rolex. Is that? I'm not saying it's not a metric. I just don't know if it's a great measure of discretionary spending, as you're saying. It feels like it's discretionary for people who are way better than upper middle class. I mean, if you have 25 grand or 40 grand to spend on a Rolex, you're doing very well in life. The average person, I don't think has that. Oracle right here, 158 up 1.4. Bank of America down 3%. Whole market's tanking right now, folks. Robinhood somehow is green right now, but Apple's down. Bank of America's down. SoFi's down. GameStop getting destroyed, down 15%. DJT getting destroyed, down 15%. Amazon down 1.4. Where's the NASDAQ? S&P's down. NASDAQ's down 1%. Wow. NVIDIA is somehow holding green, even though the entire market's tanking right here. Wow. Wow. How many of you guys think that in the chat? How many of you think that Rolex prices are a way to judge discretionary consumer spend? Like, it is one form of spending. It's hard to believe that it's like the best way to look at if consumers have money or not. Obviously, if people aren't spending as much as for Rolexes, yes, consumer spending is going down. But, you know, is that the best metric at the end of the day? It's a sign of discretionary spending for people who are in the wealthy class. Well, so but see, I don't think that matters when it comes to overall consumer spend, because the wealthy are going to buy or not buy. It doesn't matter, right? But the average person not buying McDonald's, like, that's a really good sign of, hey, if people can't afford McDonald's, we're in a really bad spot. And the Rolex index, I feel like, is not necessarily giving us the greatest outlook into that. Why is the market down? I have no idea, outside of the fact that they didn't love CPI. If you're just joining, we had 2.5. Wow, Palantir 33.87. So Palantir's down 3%. We had 2.5 on the headline, but core was 0.3. If that was 0.2, I think the market would be up right now. That was 0.3. And so I think market's reacting a little bit negative towards that. But I'm surprised NVIDIA is going green as the entire market is going down. NVIDIA is still down from 111, but the fact that it's holding up, I mean, we got some real red, dude. S&P down 1.5% is real red. That's not a joke. We are down. We were at almost 550 yesterday. Now we were at 549 in the pre-markets. Now we're at 541. We're testing basically last Friday lows. Last Friday lows was 537. So we fall another 0.5%. We're probably going to be right close to that 537 level as well. Chris says travel is a better measure of consumer discretionary. Yeah, I would agree with that. Way better than the Rolex index. I was surprised that airline fares went up today. I mean, there were some arguments that traveling is more seasonally adjusted, which is why airline fares went up. But you would think airline fares go down a little bit in August over the summer. It's the debate. I mean, maybe the market's tanking because they think Kamala won and they don't like that theoretically, but I don't know, dude. In the futures and in the morning, it kind of didn't feel like that. I mean, maybe there's a little bit of a delayed reaction there, but I don't know. I still don't know. I'm still not fully convinced the market like absolutely wants Trump, because the tariffs at the end of the day, the market has to figure out, hey, are these good or bad? And I don't think they're fully convinced on it yet, to the upside or the downside. So I don't know if they would hate Kamala. I think Bitcoin would hate Kamala. I mean, dude, if you're all in Bitcoin, that's got to be the scariest thing going into November 5th. Like, if Bitcoin is a big part of your portfolio, I would have to imagine scary, dude. She has not proposed anything meaningful to get Bitcoin to be adopted. Trump doesn't have a ton of meaningful stuff on Bitcoin, but he has a lot more than Kamala. So that one I think is going to be pretty interesting. Now, granted, if it doesn't matter and the Bitcoin just doesn't care, that would also be pretty funny, because then it was just all this like fears, for no reason, no matter who got elected. Also, the 10 a.m. dump. That is correct. We do have the 10 a.m. dump, and it's September. Jensen's not on yet, but we got Ed Yardeni. Let's hear from him. I think Jensen will be on probably in like 5 to 10 minutes.
Good morning.
Thank you.
I know you've written last few days about expected chop in September. You wrote about China last night, but I wonder, does this core CPI print, should it be considered a threat to the doves?
Well, I think to the extent that there was some heightened expectations that there would be a 50 basis point cut in the Fed funds rate next week, which would be sort of the ultra dovish position. I think that's off the table now, and I think you're more likely to see 25 basis points. I shouldn't say it's off the table. I really don't know what the thinking of the Fed is, other than that they've certainly pivoted away from being concerned about inflation to being more concerned about keeping the unemployment rate down. But the data today was pretty good. Take out rent, and the headline inflation rate was 1.2%. We've been talking about getting to this level for a few years. We thought that it would come down. So things are going right on inflation, and I think the surprise is going to be that the economy is more resilient than people are thinking.
If that's true, what did you make of the bank commentary yesterday, and did that move the conversation meaningfully?
Well, Carl, I only listened to what supported my story. The fellow from Bank of America, Brian Moynihan, certainly was very positive on that. Jamie Dimon's been kind of pessimistic about the outlook since May of 2022. He's been a long-time pessimist. But I think, look, you can't really generalize about the consumer. We clearly have consumers that are struggling, that maybe have maxed out on their credit cards. But then we also have plenty of other consumers, particularly the baby boomers. Let's say there's 70 million of them that have $78 trillion worth of assets. A lot of them are retiring, and that's why the savings rate's down. And they're spending money. There's no doubt about it. They don't have mortgages. They don't have to pay for college education. So I think it's a mixed story on the consumer. And when you kind of add it all together, it still looks pretty good. As you know, the Atlanta Fed estimate for consumption during the third quarter, real consumption, is 3.5%. That's gangbusters.
I'm thinking of all the big things you've written about, Ed.
Guys, I'm just realizing Taylor Swift has endorsed Kamala Harris. I was out all last night. I didn't see the debate, but I'm just finding out Taylor Swift has put up a long-ass Instagram post saying she endorses Kamala Harris, and she has a picture of herself and a cat. And she said, signed catless lady. The fuck is going on, bro? What is going on?
In recent quarters, namely the generational transfer of wealth, right, which you've talked about, the productivity progress we're making, and the export of deflation out of China. Shouldn't those all be considered positives for the U.S. economy?
Absolutely. I think the U.S. economy is the big winner here. You know, when the Fed started raising interest rates in 2022 through 2023, it was logical to believe that tightening of monetary policy would cause a recession. And the reality is there was a recession. It was just happened to be in China. They have a property depression and they're exporting deflation. And that's one of the reasons that our CPI inflation rate has come down so rapidly, is because durable goods inflation, and we import a lot from China in that regard, that's come down into deflation again. So yeah, absolutely. All those things are good for the economy and positive for the stock market.
Ed, did you read the Beige Book? I mean, more districts contracting. I mean, also, it does jibe with some of the recent commentary. I was looking at Dave & Buster's today, not necessarily that that's the most indicative of the economy, but tough kind of consumer environment. Many others are feeling the pressure. Petco CFO, choiceful and value. If you listen to companies and look at the anecdotes, it's full of weakness and softness on the labor market, on the consumer.
All true, and a very good point. It just seems that a lot of the survey sort of data has been more pessimistic than the actual data, and it's the actual data that matters. I mean, real GDP is running at 2.5% during the current quarter, and that's even with July being affected by the weather. And as I said before, the consumer is running, as the run rate is 3.5% in the third quarter. So I think that for some reason the surveys are picking up a more pessimistic tone than the data is actually reflecting. Initial unemployment claims remain extremely low. Everybody kind of got bummed out by the payroll employment report for August, but actually the work week rose, and so aggregate hours worked is an all-time record high. And I think retail sales are going to surprise to the upside, as will personal income, because
I agree. I think retail sales are going to surprise.
Not only did we have more people working in aggregate in terms of hours, we also had a nice increase in wages. And to the point you made, Sarah, about real wages, they're absolutely up. And Lael Brenner was absolutely correct in saying that can only happen with productivity doing well.
All right, that's what we got from Ed Yardeni. Guys, I don't know if Jensen's going to be on CNBC this morning. Can someone confirm that for me? He's speaking at the conference, but I don't know if he's legit going to be on CNBC. That might happen around 11 or 12, but I don't know if he's going to be on anytime soon. So we might have to wait until we get that footage for the market close to see what he has to say. But overall, I agree with Yardeni. I mean, it seems like the market wanted 50. Core came in harder than expected, so we're not going to get 50, and we'll get 25. It is what it is. But yeah, Taylor officially endorses Kamala. She put up a picture with her hat. The only clip I saw of the debate last night was Trump said they're eating the dogs. That is the only thing I really saw. And so I imagine this cat picture is because she's referencing Trump talking about people eating cats. I don't know what simulation we're living in, dude, for this to be the key talking points of the debate, but it is what it is. And yeah, she got 8.3 million likes, 1.3 million shares on this post. Whether you like Taylor or not, she has influence. That's for sure. So there you go. Elon, did Elon tweet about the debate? What did Elon say about this shit? What did Elon Musk tweet about the debate? Let's see what he said. Do we have any tweets by Elon? Let's see. Okay, he has a lot of tweets. I'm trying to go back down yesterday to where the debate started later at night. Elon. No, this can't be real, dude. Hold on. Did he actually say this? Did Elon? What the fuck? There's no way, dude. What did I miss last night, bro? Holy crap. Fine, Taylor, you win. I will give you a child and guard your cats with my life. There's no way he said this, bro. There's no... What the fuck? What is going on? This had to be after Taylor posted the Instagram thing last night. Did he say he'll give her a child and go? What the fuck, dude? Dude, this is crazy. What is this election turning into, bro? Holy crap. You take one night away from the politics of everything going on, and this is what you see. This is crazy, dude. This is wild. Again, I really did not look into this debate, dude. I did not have a lot of time. So the only thing I heard was the Cats thing. I heard people said ABC was biased, and then I saw the Taylor Swift thing 5 minutes ago. That's it. Other than that, I have no idea what the heck happened yesterday. Bitcoin still tanking, Google tanking, Palantir down 2.5, Nvidia somehow green. I guess people are excited for Jensen today. And S&P, there you go, down a full 1.5%. S&P goes down another, call it 20 bips. We're going to be at Friday levels from last week. We're going to give back all of the gains we got over the past 3 days. All of the gains we got. Wild. Zocold says nothing substantial. Okay, so for those who watched the debate, let's end on this. For those who watched the debate, was it a debate that helped you think more about the state of America in terms of future policies, or was it literally a nothing burger? If you're a Trump person, you're going to be a Trump person. If you're a Kamala person, you're going to be a Kamala person. Like, do you think if you were an independent, or let me know in the chat, if you are an independent, you were swayed one way or the other? Let's end it on that. Because I think that's what most people thought based on the debate yesterday. Elon said he's going to impregnate Taylor Swift, dude. Wow. That is wild. That is that's kind of crazy, bro. Half of my net worth is tied to that man. Well, at least 10-10 is happening. At least 10-10 is happening. I think that's all that matters. That's all that matters. Doug says nothing burger, but independents are going to think Kamala kicked his ass up and down the street. Okay, so you think independents. Jensen's not speaking. I think we're not going to get Jensen speaking, guys. He's going to be probably on later throughout the day. So I'll get that whenever it happens. Okay, so Doug says independents think probably Kamala won. Jared says, I'm an independent. I'll never get that time back. I found out the walls were thin at this hotel because yesterday, like when I got back to the hotel from the airport, I heard the debate from someone else's room because they were playing it. So I heard a little bit of the debate based on someone else playing it next to me. And that was the extent of what I heard of the debate. I'm an independent, and that debate slightly pushed me towards Trump. Okay. Independent voter, and that debate didn't sway me either way. They both suck so bad. If you were on the fence, it might have pushed you towards Kamala. More confused to vote. You know, it seems like it's 50-50, dude. It's the same. This election's going to be close. It seems like the chat right here. Some people are saying, actually, that pushed me closer to Kamala. Other people said, no, Kamala's full of crap. Pushed me towards Trump. We are so divided, man. We are so damn divided. As an independent, it slightly helped me go more towards Trump. I had to watch Meet Kevin stream. Well, did you use the coupon code for the debate? You had to. There had to be a coupon code for the debate. I'm an independent and did finish my popcorn ball. All right, so at least it was good TV. It had to be good TV. As long as it was good TV. As we're saying this, the S&P is tanking at 540. Goodness, I don't know how Nvidia's green and the S&P is down, but Nvidia somehow is green. Trump won, no doubt. Kamala's arguments were all emotional. I wanted to hear Kamala actually say something of fair value, and she didn't. Trump was Trump for better or worse, but Kamala is just a hollow puppet. So it seems like the reaction I'm getting here from the chat is Trump didn't fully capitalize on like really winning. Like no one's saying he objectively won. Like on Biden, Trump, I think all of us, even if you were the biggest Biden supporter in the world, you were like, all right, Trump won. On this one, I'm not getting that vibe. The vibe I'm getting from you guys is Trump didn't win. He lost, and that's why Kamala won. But the bias of ABC, which I heard was a big deal, is leading a lot of people to think that it was never a fair debate for Trump in the first place, which kind of puts it back to where it was before. Like if in terms of changing the national conscience to Trump or Kamala, it seems like it still went 50-50 if the broader electorate didn't get any substantive value from the debate. Like if one half of the elective thinks ABC is going against him and the other half of the elective thinks that Trump is spewing nonsense, then like, did it really change anything? Did it really change some people to think one way or the other? Moderators made sure to keep talking about all the talking points for Democrats, abortion, January 6th, etc. So hold on. Did the moderators at all challenge Kamala? Like objectively. Again, I didn't watch it. Did the moderators at all bring up any points that like a reasonable interviewer would bring up against Kamala to like push back? Like, did they ask her how she's going to pay for the $25,000 housing? Did they ask her about price controls? Did they ask her about like the student loans that her and Biden were supposed to get rid of? No questions about immigration. They did it like 3 times, but they went at Trump like 20 times. I feel like that's the answer that I think a majority of you got. I'm seeing a lot of no's in the chat. I feel some of you guys are saying yes. They're saying yes, but it's not as much as they went at Trump. I might have to watch this debate, dude. I'm going to be busy today, but I might have to just find a time to watch it. You guys are really saying it was a 3-on-1. Huh. Interesting, dude. It kind of gives, if everyone's correct that it was a 3-on-1, it's giving a little bit of credibility to Trump's argument about not wanting to do the debate in the first place. Remember, he was hesitant to do the debate because he knew that, like, I think he wanted to do it on Fox or something. I think he didn't want to do it on CNN or ABC or all these things because he kind of knew it would be tough. But he ended up doing it. So if you really think it was a 3-on-1, maybe he had a point. Basically, the moderators asked Trump why he is Hitler, and then the moderators to Kamala, what do you think of Trump being Hitler? Oh my God. Goodness gracious. I'm actually happy I didn't watch it, dude. I'm so happy. Jimmy, we're tanking because core CPI came in higher month over month than expected. That's the only reason I think we're tanking. And it's September. Yeah, I'm kind of happy I stayed away from it last night, dude. I didn't even feel like entering into that world and seeing what it was. But then I came home last night and I was like, all right, people are pretty divided on this. Some people, yeah, it seems like the majority of you are saying it was a little bit tough. See, and I think again, after Biden versus Trump, it was pretty objective that Trump won. And every mainstream network was saying Trump won. It wasn't like conservative versus Democrat. But this one, it's not as objective. The only objective part I'm getting from here, like from most of you in the chat, is that it was biased. And it seems like that's what you guys thought of it as. Robinhood, is Robinhood green? We're still green on Robinhood? Wow, Robinhood and NVIDIA are green. Robinhood, HIMS, NVIDIA, Rocket Lab are green. And everything else is red. Palantir's fighting back for 34. Kind of feels like a boring sell-off, dude. It doesn't even feel like it kind of feels, maybe it gets more aggressive, but it kind of is just like giving back a little bit of the gains we got on Monday, and that's kind of it. We'll see if it gets any worse from there. If you check polls and betting odds, Kamala objectively won. Well, yes, I did see this. I did see a ton of polls on the Poly Market betting website, and most of them said Kamala won. Trump had a 4-point lead going into this, and now I'm looking at it, and it's 49%. It was 54 to like 49 or something, or 46, whatever the range was. But wow, yeah, the betting markets I'm looking at are saying Kamala won. So at least from the betting odds, the people who are putting money on the debate, the people who picked Kamala, they're getting a payout today versus the people that picked Trump. But from everyone else, in terms of the qualitative aspects, it seems like it was a bit more biased. Michael Dell just tweeted something. He said, the skepticism around AI's ROI today feels like the doubts people had about the internet in its early days. Back then, no one could fully grasp how much the web would transform our lives, and now AI is on the same path. Yes, it might be tough to measure immediate returns, but if history teaches us anything, it's that game-changing technologies take time to show their true impact. By embracing AI, we're not just adopting a tool, we're inventing a future where human potential gets a major boost and new opportunities are unlocked. Just like the internet became the foundation of our digital world, AI has the potential to do the same when we approach it with the same optimism and vision. Weird tweet, ChatGPT type of tweet. But yeah, there you go. Dell CEO saying, hey, AI is real. Is Dell stock down today? Is he just trying to pump the dude? If you're gonna embrace AI, at least have some fun when you talk about it. It's like the revolution of AI is very real because blah 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 blah. It's like, can you just talk like a normal person, bro? Like freaking dude, the Snowflake CEO Sridhar Ramaswamy tried to do a tweet the other day. You guys know this article that's been going around by Paul Graham called what is it? Founder Mode. I think it's an interesting article. I think it's lacking a lot of substance in the article, but the whole idea is like, hey, we need to like embrace founders and entrepreneurs and not be managers. And then Sridhar tried to do a tweet talking about embracing founder mode. And it was the most ChatGPT non-founder mode tweet I could ever imagine you saying. And he's not a founder, right? He is a professional manager. So it was ironic that he was making that tweet. But it was just like, dude, can you just be a normal human? That's the one thing I love about Elon. He's just normal when he tweets. Like, he'll say some crazy shit, but at the end of the day, he'll say only impregnate Taylor Swift, but that'll be some crazy stuff. But at the end of the day, he'll tweet like a human versus like some GPT trying to make a point. Elon's definitely not normal. I mean, when I mean normal, I mean like, hey, you'll just tweet like an emoji, or you'll tweet like in lowercase letters, and you won't have all the periods and exclamation points. You know what I mean? Like you just tweet. Whereas these CEOs, they like, it looks like 17 lawyers look at the tweet before they put it out, and it's like, it's not that serious, bro. Like, but obviously they're afraid of all the legal stuff. Affirms at 37.42, Apple's at 218, Bitcoin's down. Bitcoin down makes me feel the market thinks Kamala won. So that's one objective data point I can look at. I don't know why else Bitcoin would be down today outside of the market falling. Maybe CPI is a reason, but that could be one argument that markets think Trump lost. Not in India. I'll be in India in October. Not in India yet. He was a founder of Neva that was acquired by Snowflake. Yeah, but Chris, like, Neva is trash, bro. Like, there's a reason they acquired. First of all, they acquired Neva not because the technology was so amazing. I don't even think they use Neva anymore. They acquired Neva because they needed a replacement for Slootman. And his background as a manager at Google, leading the ads business, that's impressive. I'll give you that. But Neva, I mean, dude, Neva, it was a failed consumer search engine that pivoted to, they tried to compete with Google originally, and then they missed the LLM wave. And so they turned into this enterprise search product that I really doubt is like the reason Snowflake purchased them for $150 million. I'm pretty sure it was more so for the talent, and the talent was him. Again, not a bad guy. He's a smart guy, but he doesn't have the founder energy to him at all. It's like, it's tough to listen to him. But nonetheless, a lot of these CEOs putting out tweets never feels as authentic. Yeah, we talked about the debate, Jesse. I didn't watch the debate, but from the vibe I'm getting in the chat, the debate was very interesting, and lots of people felt it was a 3-on-1, and lots of people feel Trump didn't capitalize on the opportunities, but they also felt there was too much bias against it. So that's what I'm getting from the chat here. Did Elon just tweet again? No way. You said Elon tweeted about a cat disease? Are you trolling? Did Elon tweet about a cat disease? Okay, he didn't tweet about a cat disease. Yeah, he didn't tweet a... He said Toxoplasma gondii is a danger to our democracy. What is that? Toxoplasma gondii? What is this? Hold on. I'm about to Google this, bro. I'm about to Google this right now. We're going to ask ChatGPT. We're not going to Google. We're going to do ChatGPT. Does anyone know what this is? Okay, we're going to ask ChatGPT. What is this? Ready? Here we go. Oh, I think you're right. It was a cat disease. Yeah, you weren't trolling. What is going on, bro? Toxoplasma gondii is a parasitic protozoan that causes toxoplasmosis, a common infection in humans and animals. It is an intracellular parasite, meaning it lives inside the cells of its host, and its life cycle involves both asexual and sexual reproduction. Okay, hold on. Explain this to me like I'm in 3rd grade. This is nonsense. Like, can you just talk about it normally? It's a tiny creature, kind of like a germ, that can live inside animals and people. It comes from cats and can spread to other animals and even humans. Oh my goodness. This is just basically cat bite fever is what June says. Does anyone in the chat that has a cat know about Toxoplasma gondii? First, Elon says he's going to give Taylor a baby. Then Taylor says she's endorsing Kamala. Now Elon saying this is a threat to our democracy. Scientists also think this tiny germ might change the way some animals act. For example, mice that it might not have be as scared as cats, making it easier for cats to catch them. Don't worry, though. Most people don't need medicine unless they're really sick, and you can be careful by washing your hands and cooking food well. Dude, if the defining part of the American election this year is going to be about cats and Toxoplasma gondii, it is going to be a hell of an election cycle, dude. It is going to be a hell of an election cycle. Carp's on CNBC Thursday, correct. CNBC Thursday. Carp will be on CNBC tomorrow at 11 a.m. Okay, so a lot of you, it's because of Taylor's cat. Dude, this is insane. This is absolutely insane. This is crazy, bro. Some of you guys who have cats in the chat, you're saying, yeah, this is like a real thing. Okay. Well, I guess the defining point of if Trump or Kamala wins will be about Toxoplasma gondii. By the way, NVIDIA just tanked. NVIDIA was holding on by a thread. Palantir at 33.75. NVIDIA's down. You can't really find that much green. HIMS is kind of green, but that's the only green I'm seeing. Broadcom is red. Oracle's a little green. Oracle's holding on. Robinhood is red. Solar Edge. Oh, solar stocks are green today as well, guys. So Enphase, this is another argument that the market's saying Kamala won. Bitcoin's down and then solar's up. Obviously, if Kamala wins, the market's interpreting that we'll have less reliance on oil and we're going to transition to other sources of energy. If we have more reliance on oil, you don't need to get solar stocks, right? So maybe that's the reason why Tesla's down as well a little bit. Market's kind of just thinking if Kamala wins, solar catches a bid. So Enphase, which is at a shitty year, you're up 3% today based on how the market interpreted it. All right. I guess that's what we got. Coincidentally, that was the disease that Martin Shkreli raised prices to treat. Wow. That is a coincidence. That is actually definitely a coincidence. SoFi's down. Amazing. Yeah, dude. SoFi's not. It's not going to get any love right here. SoFi 696 down 1.28%, below 7. NVIDIA just fell. Hopefully Jensen says something at that conference. Jensen, I think the only thing they care about at that conference, and hopefully we get that update soon, is the Blackwell update. If he can say something interesting about Blackwell, aka, yeah, it's going to produce a shit ton of revenue, I think the market, might get bullish from that perspective. If he says nothing about Blackwell, then it's going to be a nothing burger because no one really cares. Yeah, he's not on CNBC, so we'll have to wait for him later throughout the day. Oh boy, watch the last chapter of Elon's Olin interview. It's about SNL and a skit they wouldn't let him do. So I saw that clip. That was actually really funny about what he wanted to say that he couldn't say. Do you guys want to watch that? That'll be our last thing for today. Do you guys want to watch that? It's a funny Elon at the Olin podcast talking about SNL. We can end off the show there and watch that because we don't have Jensen on CNBC that I thought we would get. But besides that, yeah, for those that are wondering why the market's red, core CPI came in month over month higher than expected. Slight bit, but CPI is still 2.5. I think that's amazing. S&P now is down more than 1.5%. Market's going to have to figure out how they want to interpret that CPI number over the next few weeks. Yeah, I don't know why Robinhood's green, dude. The fact that Robinhood's going green and all this craziness is wild. And then Palantir is still holding. 33.72. I know it's down 3%, but still holding on to the high 33s. People are buying it. 20 cents below 34. You know, it's not too bad when I go at those levels. Let's watch that clip and then we'll end out the show for today. I thought that was a funny clip, but I'll do some more research on the debate tonight. Again, I haven't seen the debate, so I'll watch more of the debate. I'll try to get a better understanding from what I'm getting in the chat. All of you feel not substantive debate. All right, so here's Elon on the Olin pod a couple days ago. We'll watch this and end it out.
Here we go.
All right, here we go, guys. All right. So one of the things that I think everyone's been sort of wondering this whole time is Saturday Night Live actually live? Like live. Or
you guys can't hear it? You guys can't hear it? It's weird. Vid is good. Mic is wrong. Okay. All I was saying is let's watch this clip. Sorry, that was weird, but let's go back to it.
So one of the things that I think everyone's been sort of wondering this whole time is Saturday Night Live actually live? Like live, or do they have like a delay, or like just in case there's a wardrobe malfunction or something like that? Is it like a
truly live
5-second delay? What's really going on? But there's a way to test this.
Right. We came up with a way.
There's a way to test this, which is we don't tell them what's going on. As I walk on and says, "This is the script." I'll throw it on the ground. We're gonna find out tonight, right now,
if Saturday
Night Live is actually live. And the way that we're going to do this is I'm going to take my cock out.
This is the greatest pitch ever.
And if you see my cock, you know it's true. And if you don't, it's been a lie.
A lie. All these years.
All these years.
Now this is.
We're gonna bust them right now.
And we're pitching this.
Yeah. So we're pitching this
on Zoom.
Yeah, we're pitching this on Zoom on like a Monday after. We're we're like kind of hungover from the weekend, and we're like pitching this
We're in
like
Miami.
noon. And it's Jason's on, and
Mike and
and Mike. So essentially got like my friends who I think are sort of quite funny. Jason's quite funny. I think like Jason's the closest thing to Cartman that exists in real life.
We have a joke going that he's Butters and I'm Cartman.
Yeah. So, and then my friend Mike's pretty funny too. So we come in like guns blazing with like ideas, and we didn't realize like actually that's not how it works, and that's normally like actors and they just get told what to do, and like, oh,
right.
What you mean we can't just like do funny things that we thought of? What?
They're watching this, and on the Zoom they're aghast at Elon's pitch.
Yeah, it's silence. Like so, I'm like, and I was like, is this thing working? Is this?
No, it's like, are we muted?
Is our mic on?
And they're like, we hear you.
Yeah, and then I think after a long silence, like Mike just says the word crickets.
And they're not laughing.
And they're not even a chuckle. I'm like, what's going on
here? And then Elon explains the punchline.
Yes,
which is
exactly. So there's more to it. Okay.
Yes.
That's just the beginning.
So Elon says.
So then I'm like, so I said like I'm gonna reach down
into my pants.
And into my pants, and I stick my hand in my pants, and I'm gonna pull my cock out. And I tell this to the audience, and the audience is gonna be like, "Go what?"
Right.
And then I pull out a baby rooster.
Yes.
And it's like, okay, this is kind of PG. It's like that, not that bad. It's like this is my tiny cock, and it's like, what do you think?
And so then.
All right, so That's Elon's Elon. That was that was Elon. So there you go. I thought it was funny. I know some people think it's cringe. I thought it was kind of funny. Obviously, they didn't get to do that skit. He was on SNL 2 years ago or 3 years ago, 2021, when Dogecoin was pumping. He had some good skits, but that one was definitely a funny one. That one was definitely a funny one. Elon's Elon, and Elon's complaining about cat diseases. Obviously, Elon wants Trump to win. We all know Elon really wants Trump to win. And, you know, one thing I don't think people think about, Elon has over basically 200 million followers on Twitter, and Elon every day posts at least 2 to 3 pro-Trump tweets. Like last night, he was literally like, Kamala's like the death of democracy or whatever. So Elon's been theoretically providing Trump a ton of not monetary value, but the social value he's providing in terms of brand exposure. Like an Elon tweet gets 20 million views on average. You would have to pay hundreds of thousands, if not millions of dollars for a tweet that gets like 30, 40 million views. But Elon's just tweeting a bunch of them a day for Trump. So Elon definitely is using his influence to try to get Trump to win. But, you know, ultimately we're going to see how this plays out going into the rest of the year. Word of the day. This is an interesting one. Kafkaesque. Kafkaesque. So I think this is based on a certain author, if I'm not wrong. Marked by a senseless, disorienting, often menacing complexity. Yeah, Franz Kafka. Let me know in the chat if you know this philosopher. But Franz Kafka, he is an author of a variety of different philosophical texts. And that's where the word comes from. That's where I thought it came from. The movie Kafka's, how do you say this again? Kafkaesque plot with its dark, surreal twist and underwhelming sense of dread left the audience unsettled. The endless bureaucracy and confusing paperwork at the government office felt truly Kafkaesque. Franz Kafka. I haven't read too much of his work. I've read a little bit of it a couple years ago, but I've read more of Albert Camus and Friedrich Nietzsche's work, not Kafka as much. But I've seen a bunch of videos on him and like listened to a few podcasts on his work, and it's actually not too bad. He wrote The Trial and Metamorphosis. Correct. Absolutely. Yep. You're right about that, Austin. He wrote The Metamorphosis. Yep. That is correct. I didn't read that book, but read different elements of his work before. Is that a Palantir hat? Yes, this is one Iliano sent me a while ago. He sent me a white one and a black one and a blue one. So this is a new one. I haven't worn this too often because it's like trying to get adjusted to my small head. But yes, it is a Palantir hat. All right. That's it for me. Thank you, everybody, for being here. Hopefully, still a good show, even though we didn't have the cowbell. We had our bootleg cowbell microphone. This is holding up. This is why I messed up when Kris was calling. Initially, I was trying to like hold the microphone and the phone at the same time, but we're using the stand right here. So after we got that figured out, it was better to listen to Kris because I was like holding my phone like right there. Usually I hold my phone on this, but this is holding the mic. And I think we'll do market close today, but I can't guarantee it. I want to, as long as the scheduling stuff works out, then we should do market close. If not, then we'll be back tomorrow for the market open. All right, that's it for me. You will find out what I'm doing here soon enough, like tomorrow. So you'll see. And yeah, we'll keep going from there. Thank you again, everyone, for joining. Really appreciate it. Last look at the markets. We are tanking a little bit right here. We'll see if this can reverse. NVIDIA just went green a little bit. S&P is still down 1.5%. So we'll see how this ends up turning out by the market close. All right. Have a good one. Bye, everybody. I'll see you guys soon. Bye, everyone.